respected members, and my dear friends, I welcome you all for this oath-taking ceremony of newly elected managing office bearers for the term 2024 and 25. It's my proud privilege as a past chairman. I am introducing the new team, young team for this term. It's really honor to be chairman of Bangalore branch. It's one of the biggest branch in India, having more than 17,000 chartered accountants and more than 40,000 students. We, being a past chairman, we know what is the responsibility and sacrifice done by the past chairmen after take over as the chairman. On this one day, chairman and his team celebrate their oath taking. Rest of the year, they will serve the members and students. Sleepless nights, they will be planning for so many programs. Guided by the SIRC, Central Council and their own programs in the branch. Branch is like a pillars of our institute. Without branch, we can't imagine ICI as a whole, even in Delhi. You can say, booth mattada karyakarta andre branch. Such a wonderful job done by the branch, and it is recognized yearly. I wish this new team also add the feathers, because continuously we have bagged the second best branch award national level. We wish this young team should bag national award, first prize of national award. With this small introduction, now it's time. Generally, chairman will escort all the dignitaries. This time, we'll request our election officer and our ex-officio to escort our chairman, Pramod R. Hegde, to the stage. I request Kota sir, Geeta madam, and our chairman of SRC Pamela sir to come on with us. Give a big round of applause. The second highest rank in the committee, our vice chairman, none other than Manjunath Hallur. With love we call him Manjunath. Please come on to the dais. The next person, secretary, she plays a very pivotal role in this term, none other than Kavita. I request her to please come on to the dais. Now it is a term of treasurer. He is going to handle major funds of the branch. Treasurer elected Mr. Tupada. Please come on to the dais. Nirupakshappa Tupad. बड़ी मैडम नहीं बैठी. And to head the Sikasa and the students, we have C.A. Sripal, HN. I request him to come on to the dais. We have other committee members supporting, guiding the entire team. We have with us CP Jain. CP Jain, please come on to the dais. We have one more young member, C.A. Rachel Johnson. Please come on to the dais. One more I want to tell that about our new chairman, young and dynamic. He is becoming a chairman in first term and third year only. He was secretary to me, very near and dear one because he was secretary to me. We closely worked for 1 year and he is having so much energy and vision for the members and students. Definitely he will do a wonderful job. I congratulate entire team and look forward for the best from them. Once again, give them a big round of applause. I request Secretary Kavita to take over the proceedings.
I request Koda sir to hand over the bouquet to Srinivas sir.
Srinivas to Srinivas.
Good afternoon. I'd like to first pay my reverence to each one of them who has served as Secretary of Bangalore branch. I also seek support and blessings from all of you elders, mentors and all to carry out this responsibility as I take up this mantle. And before I proceed with any of the formal proceedings today, I'd like to take a moment to introduce our Chairman Pramod R. Hegde. Pramod qualified as a chartered accountant in the year 2013. And that's when he started doing the ticks. That is, he's a specialist in audit. That's why I call it as a tick. He trained as an article clerk with Big Four and he qualified. After post-qualification also he worked with one of the Big Fours. However, for more than 3 years. However, because of his passion for the practice, he couldn't continue there and he started his own firm in 2016, RPAR, if I'm correct, because I have not confirmed this information with him. He's a control freak and man of standards. I meant he's a specialist in the internal audits, internal controls and IFSC. And also the specialist, his expertise lies in accounting standards and auditing standards. He is a foodie and happily married to Vasudha, lives in Bangalore and comes from a family of chartered accountants. So it's a humble guy to work and be with, and it's my privilege to introduce him to all of you. Thank you. I request Kamal to take over the proceedings. Okay. So we have the formal oath taking. So I request Central Council members here, Kota Srinivas sir, to help us with the oath ceremony. Lighting open. Sorry.
Sabage Namaskara. This is the first step they take after assuming the office of on this office bearership, the oath taking ceremony. First, let me request all of them to stand up for taking the oath. So just read out the oath. Wherever your name is there, you can read your name and approach to the designation. I, CA, you can just hold your hand on this. I, CA, to swear in the name of God, solemnly affirm, that I will bear, true faith and diligence, to the profession of Chartered Accountants, under the Chartered Accountants Act 1949, as by law established, that I will uphold the integrity of functions as prescribed in the said act and Chartered Accountants Regulations 1988 for the benefit of the Chartered Accountant profession, and I will faithfully and conscientiously discharge my role as the you can tell you of Bangalore branch of Southern India Regional Council of ICAI for the council year 2024-25 without fear or favor, affection or ill will. Further, I, CA, solemnly affirm that I will not directly or indirectly communicate or reveal to any person or persons any matter which shall be brought under my consideration or shall become known to me as the of Bangalore branch of Southern India Regional Council of ICAI, except as may be required in due discharge of my functions as the Thank you.
We'll have the lighting of the lamp now. May I request all the members sitting here to come.
Request all members to raise for model.
य एष सुप्तेषु जागृति य एष सुप्तेषु जागृति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तदेव शुक्रब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तनूनात्यनिलितश्च नान्यनिलितश्च एतद्वैतं 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 एतद्वैतं
I now request our chairman Kamal to give us an address to the gathering.
Respected dignitaries on the dais, C. Kutta Srinivas, Central Council Member, C. Pannarajas, Chairman Regional Council, C. Geeta Eddy, Vice Chairman Regional Council, and my colleagues in the committee, past presidents of KCA and current committee members of KCA, and visionaries of Bangalore branch, and my esteemed members. It's with a profound sense of responsibility and honor I stand before you today as the 55th chairman of our beloved Bangalore branch of SRC of ICI, the largest branch. At the outset, let me express my heartfelt gratitude for the trust my committee and you have placed in me. It's a privilege to serve our esteemed institution, an institution that stands as a beacon of excellence and integrity in the financial accounting world. My father served the profession. I am taking a chance to serve the fraternity. Before I continue, I would like to introduce my team. Of course, Srinivas did mention about the team, but I'll be failing in my duty if I don't personally introduce my team. So it's just not any team, but it's a blend of wisdom, wit, and a dash of whimsy. Each member bringing a unique flavor to our professional bank. Outside the office builders, if I want to start, let me start with the young member, Rejo J. Johnson. He has a lot of passion and determination, also known in the committee as Angry Young Man. His fervor is matched only by his commitment to excellence. His energy just not ignites, but debates, but also kindles the flame of ambitious of a young member. So he'll be assisting me with a lot of young member programs this year. So hope to see working together. Following Rejo, we have C.A. Chandraprakash Jainti, a very own inquisitor. We fondly call him as CPJ, has a unique ability to peel off the layers in any discussion, asking what and why. His questioning nature is in more of audit, all we all need, ensuring no stone is left unturned, and in our case, every entry is verified. Then coming to Chairman Sikasa, welcome C.A. Shipper HN, whose out-of-the-box thinking and supporting nature have always been instrumental in fostering a culture of creativity and support within our members. Shripad's innovative ideas not only challenge the status quo but also pave the way for new avenues of growth and learning. His experience as a start and entrepreneurship will give new dimension for our future members. Treasurer, I am delighted to introduce C.A. Tuppad Virupaksha Muppanna, our treasurer, affectionately known as Tuppad. His knack of lightening a mood, Tuppad ensures that every most serious financial deliberation is with a moment of laughter and lightheartedness, reminding us the joy of our journey. Thank you. Secretary, the backbone of our organization, C.A. Kavita Parmesh. She deserves a special mention, often held as our branch Nirmala Sitaraman in her previous term. For her previous role as treasurer, her precision and dedication will ensure that our operation runs smoothly as well as the audited report. Thank you. Vice Chairman, and then we have C.A. Manjunath M. Hallu, who is just not a good listener as well, but dispensing lot of yarn, wisdom with a patience and saint and knowing smile. So we look forward for a very much more gracious hearing from the committee members. And of course, I'll be failing in my duty if I don't mention our past chairmen and chairperson. Our journey wouldn't be complete without acknowledging the wisdom of our past chairman, C. Srinivas T, whom I've had a privilege of working with closely and a pillar of support and guidance. And though Divya could not join us today, her entrepreneurial spirit and personal commitments to take care, so in her absence, I would like to thank her as well. Also, each house has head of family, so we often refer Kota sir and Geeta madam as head of our family in our institute. Firstly, talking about Kota sir, Geeta madam, regional council chairperson, vice chairperson, whom shortly she'll be assuming a bigger role. So this will be a double dhamaka for the members of Bangalore branch. Moving our wide professional family, let us acknowledge the presence and contribution of Geeta V. Ma'am, esteemed representative of our regional council and the first woman vice chairperson of SIRC. Because we do also have C.A. Panarajas, chairman SIRC. It's a privilege because Karnataka, he's the first official Karnataka chairperson in the regional council. Your presence definitely has added value to this occasion, sir. Thank you for being here. Also, our central council, last but not the least, who likes to head the family of our branch and collective journey, making it more smoother and focused. His guidance and support are akin to a lighthouse, guiding our branch through ever-changing seasons of our profession, and also take care of our branch and anything which we do from the head office especially to ensure that we get all the support to our branch. Together, this team embodies the spirit of resilience, innovation and commitment as we stand on the shoulders of these giants and let us strive for the newer heights of excellence and serve our fraternity. We have a rich legacy to uphold and more success stories to script. Remember, as accountants, we always count. Let's count on each other. And as your chairman, you can always account on me. I did consider beginning of this tenure with a detailed balance sheet of my limited life experience, but then I thought perhaps better be shared over a cup of tea when I meet you regularly for the programs throughout the year. But let me assure you, under the assets column, every single member of this fraternity sits as a valuable entry. The world around us is at unprecedented pace, driven by technology advancements, regulatory changes, and global dynamics. The challenges and the changes present both opportunities and challenges for our profession as we navigate this complex landscape of our branch. Our branch roles become even crucial and very more critical. We are not just accountants and auditors, we are advisors, strategists, and most importantly, trusted partners in the nation building. Our vision for Bangalore branch is clear, just not limited to our journals and ledgers, but to empower members to excel in this changing world, to foster a culture of continuous learning and innovation, and to uphold the highest standards of ethics and integrity our profession is known for. To realize this vision, we have crafted an action plan centered around 4 key pillars: education and continuous learning, enhancing our CPE offerings with a focus emerging of technologies, regulatory changes, global best practices. We'll also try to leverage the digital platforms to make learning more accessible and engaging for our members and students as well. Member engagement and support, strengthening our support to members at every stage of their career, from their newly qualified chartered accountants to seasoned professionals. This includes mentoring programs, networking events, and forum to discuss challenges and opportunities. Working closely with regulatory bodies, government agencies, and other stakeholders to advocate on behalf of our profession within the limit of the branch powers, of course, and discuss this with the council members in time to take a decision to take it forward upward in the council. Our aim is to contribute to shaping policies and that impact our profession. Embedding sustainability in our practices and encouraging members to adopt sustainable and responsible practices also in the branches. Let's try to bring a lot of sustainability. We'll also enhance our community engagement and also make a meaningful impact of the country. I invite you all to join in this journey to contribute your ideas, to expertise and energy towards realizing a collective vision together we can achieve a great success. Let me take you through the PPT quickly of my action plan. Think global, act noble, and always be vocal for the local is the line which the past presidency Aniket Talati rested his battle with. I echo this sentiments before he rested it, so I would like to start from where he stopped. And considering the opportunities, let's continue to do what we are doing. I always feel there is a scope for improvement in our profession or in any activity. Let's strengthen our profession in our local standpoints and also seize the global opportunities what is way ahead for us. Also, we are all aware that the government has included our financial services in the export arena. So which means there's a lot of opportunities which are coming forward, and my vision is to make our members and students a global leaders. Coming to action plan. This year, let's focus on my primary focus, including with my team, would be quite a lot of brand building activities for our branch, getting out the digital newsletters in a more easier way to read, and certain virtual CPE programs for the members in industries, having a lot of mentorship programs, and of course certain TV programs. Let's try to get into the media as well. And I would like to hold a startup summit this year. With respect to member engagements, when I say global, let's also do things globally. I will be organizing an international study tour, and of course our annual conference which is there, international residential refresher courses, virtual CPA programs with international speakers, certification courses on contemporary topics. And coming to handcrafting our future, we would like to extend our study centers or study rooms and lot of industrial visits to our students, so that people who are not both exposed to the industries and manufacturing sectors, so let them take the advantage of it, which will help you in your office. Educational and cultural activities ongoing which is as usual. Quite a lot of seminars and very technical topics in the era of technology, and smart classrooms with the support of HO is what we are looking forward. Then let's have synergies between the Bangalore branch and overseas chapters to understand the global opportunities we have and whether we can play a role there and increase our opportunities. Embracing the change and the ever-evolving accounting profession. Tech Summit, which is planned this year, revamp of ICI Bangalore branch app so that it's very handy. You don't face quite a lot of issues while doing registration for the CPE programs and for the students as well. Fostering inclusivity and diversity. Fortunately, our secretary is women, so we can expect quite a lot of women-centric programs, and also we have the privilege of our lady chairman will be going to take, so let's target for quite a lot of women programs. Of course, other things in my bucket list is our current lease renewal, which is underway, and more importantly, new infrastructure. On behalf of the committee, since Kota sir is here, we'll take this up, sir, and work together to get a good infrastructure for the Bangalore branch. Advocacy and member support. I've seen a lot of members complaining quite a lot of items pending. They have written to various committees, various departments, and their issues not getting resolved. I would like to extend one more support in my personal capacity. I walk 2 miles ahead. If you have any issues, do write it to me as well, so that I will see that I speak to the respective committee members and at least get the talking with the respective departments. Finally, theme for the year, Jnana Pravartanam, navigating this journey with compass of knowledge. Jnana Pravartanam is nothing but, in simplicity terms, advancement of knowledge. So, wherever our knowledge, as I said, there's always scope for improvement, there's always scope for learning. Let's learn more. Nobody is perfect, so let's start let's doing things in a better way. Thank you.
Thank you, Pramod, for giving an overview of your plan for this year. May I now request Pandaraj sir to address the gathering, Chairman of SIRC.
Congratulations, the young and dynamic chairman, Pramod and his team. Don't want to take a lot of your time addressing each one of them on the desk. And the Honorable CCM, Prota Srinivasi, and my colleague Gitaji, and esteemed members and students here. I am very happy, doubly happy to say that I had the opportunity of installing 2 chairmen in Bangalore in 1 year. Last year also, I came here, I saw the installation of Garg. Of course, I could not stay back for the installation and the oath taking. But today, because courtesy of Gitaji, who decided a date after the formation of Bangalore branch, I am made to speak today. So, hearty congratulations once again to the team. And the action plan and the vision that we have is really very good. I would only say 3 points because I have to run to catch a flight. Number 1, the institute is run by small and medium practitioners. I'm very categorical on this because you see from chapters, study circles, branches, including regional council and the central council, majority or most of them are from small and medium practitioner area. So that being the case, we are the flag bearers of the Institute of Chartered Accountants of India, and it is the bounden duty of every one of us here, including yourself, to work together to see that the future of the profession in the hands of small and medium practitioners is intact, and also as far as possible, as widening as possible. This is the most challenging era or times which we are facing in the profession, because the government's policies are more towards the corporate entities, which will not support much to the MSME entities. So we have been seeing the MSMEs are not so healthily growing. Normally MSMEs are our clients, number 1. And number 2, the automation that is happening much faster than what we think at the government levels are really very challenging. So so far 75 years we have been talking that there is a challenge, and we have converted the challenge into opportunity, and we have survived with the profession. But is it so? If it was so, 90+% of the youngsters who passed the examination would not have joined the corporate entities. They are not coming to practice. Why? So that is where we have to introspect ourselves, and I am very happy that you have included the inclusive growth. That is, inclusiveness, if it is not there, definitely will not be able to survive in the profession. So in this regard, we are together and we will work as a team. So including the members. Please don't take that the responsibility is not there on you. Please come out with your ideas and communicate to the branch chairman and committee so that we can think of the newer areas where we can explore the possibilities of widening our practice areas. So this is very, very vital, and at the same time, students also having hereafter having only 2 years of term as articleship, and how to combat the shortage of staff at the small and medium practitioners offices. So that also we have a plan at SIRC. It has worked very well in Tamil Nadu. We can do here also train and learn one program at BCom level, which will help them to get the. It is there, no? So there you can recruit the people for the small and medium firms also. So all of this, we talk always global and also roots of the. So there are 2 sectors which I wish to pressurize and close the talk. Number 1, 65 to 70% of our population live on agriculture, and that is the sector which has to contribute greater than what it is now for survival of the country, because we call ourselves a partners in nation building. Now we have to explore what are the possibilities of our profession in agriculture sector. And we have tried already once that what is the role of MSME in agriculture sector also. Please try to explore that, to go to the roots of the country, and also see that there are more enterprises. Very schemally there. Udyamiyagu, Udyoganidu, only on slogans, but it is we have to take it forward, see that the entrepreneurship is developed. Then only there will be our prospective clients. That's one side. And at global level, I am not so well versed with the global opportunities and all. And Bangalore being the hub of technology, try to explore what are the opportunities at global level. For this, what we require is to combat the shortage of staff, and also the pace at which the government is moving and the pace at which the businesses are changing. It is very, very vital that all of us should become tech experts. So I humbly request you to do more programs on how to widen the opportunities for the profession as workshops, not as a simple jatra like this is one jatra we will do every year, okay. But try to do more and more workshops. Try to get what are the inputs that our members can give. There are wonderful knowledge is there within our members. You try to reach out to them, get the ideas and try to do them. Number 2, technology also. You have in Rejo, the tech expert, try to see that what are the possibilities of making members use advanced tools at lowest cost or nil cost. For this, we have already made a team at SIRC. They will always be there to help you out and do workshops. Fix some good fees, because those who come sacrifice their time also should be here. Only after 3-4 batches, they would realize that that is really helpful. So with these words, I am doubly happy, and I congratulate you very much, and thank you very much for this opportunity. Thank you all for this.
Thank you, sir, for your wise words. I now request CA Geeta AB to address us.
British Frontaliers, Round Central Council Member C. Kota Srinivas, and the newly inducted team headed by CA Pramod Hegde, and past chairmen, and the KCA office bearers, elected professionals team, and all other members and students. Good afternoon to all of you. It's indeed my privilege to be here, to be part of this installation. Of course, as a Vice Chairperson of SIRC, As Panarasa said, I would have become a chairperson. I would have come as a chairperson, but somehow I postponed our program to 22nd. So it's really my proud privilege to be here, to be part of this program. It's a significant moment in everyone management committee members' journey to celebrate this moment of installation. First of all, I would like to congratulate the outgoing chairman, this Divya S, for actively, even though in spite of her busy schedule in her entrepreneurship role and motherlyhood role, still she managed with her team members, and not only managing the activities but also she backed the award, her team backed the award for Bangalore branch. And I also congratulate and appreciate the incoming team. As we all can witness, all young and energetic, enthusiastic team members sitting here on the dais, that itself is giving the glory to the management committee of this year. As I stand here and look back the year when I was a chairperson of this year, the challenges which we faced, the success which we achieved, really it was so awesome. And we began our journey, we all began our journey with a common vision. That is the teamwork which we do in the committee. Serving the largest branch itself is a really learning experience for anyone that really I enjoyed, and I never forget in my lifetime of the experience which I got here in Bangalore branch, serving as a committee member and growing to the level of chairperson of Bangalore branch. No doubt that the incoming team also will work together with their dedication and putting their all efforts. And when it comes to past and present committee members and past chairmen, their unwavering dedication and hard work will commit to excellence as proved with the continuous awards that we really witnessed here this time, and continuously the Bangalore branch is getting the awards year after years. Earlier we were seeing whether the Bangalore branch will get the award or not, but this we are all witnessing these coming years that every year after year we are getting one or the other award, and this year we got both awards, a Sikasa award and the Best Branch award too. So I hope so this year also these young team members definitely will be in their first position, not as a second or not as with joint with anyone else. Definitely they will back the first award this time too. And I wish to sing with those people, and I wish you best of luck. And before concluding, I would like to thank all the members for giving me support, and your wishes and your support made me to reach to this level, which I am going to take over in the next few days. And at the same time, I seek the same support from you people for our upcoming SARC conference in the month of August at Bangalore. Thank you.
Thank you, ma'am. It's time for Central Council member Kota Srinivas sir to address. Sir, please.
Sabhi Namaskara. Dignitaries on the dais, the newly elected chairman of Bangalore branch, the young and energetic, I should say, Pramod Segre. So Hegde, I should say, to define him in two words, H&H. One is he's a humble person, as you have already heard in his opening remarks. And of course, a hard-working person, what I've seen from last 2 years. I wish that he will continue his humbleness, but also the hard working, so that whatever we are expecting to achieve the greatest award or the first award at the national level, I wish that you will achieve that in this year. Let me also congratulate the entire managing committee members, the Vice Chairman Manjuna, also an hard-working person. Then the treasurer who was there last year has become the chairman, secretary of the branch, Kavita. Wish you all the best. And she was very meticulous in completing the accounts and sending us MIS reports every month after month. So thanks for that, Kavita. Then we also have who was a SCASA chairman last year, the Garg, who has assumed the office of treasurership. I wish you also continue your good work. He also bagged the second best SCASA award at the national level. A big round of applause to him. So Bangalore branch got the second best branch at the national level. So in absence, I should thank Divya and his entire team for this particular achievement. Then also we have newly elected SCASA chairman, Sripal. Wish you all the best. He himself has one SCASA member in his family, so that he can definitely do good things for SCASA students. He is a student member. The other managing committee members, the past chairman of the branch, Srinivas, and other two members, Vijay and Vijay. Well, members and students, today we are here to the new committee, and of course he has given his vision. I wish that I'll also help him to see that everything, whatever you have planned, will be achieved in this next 12 months. Jnana Pravartana is what he has kept. So with all the programs that he conducts, he will do Jnana Parivartana of all of us, because we are all attending the CP programs, which is required to attend at least 16 hours of physical program. Post-COVID, where earlier it was only virtual program that we were supposed to attend, from last year it has become physical. I hope all of you have completed your CPA requirements for the year 2023, and this year 16 hours of CPA physical hours have to be completed, and 4 hours of virtual that through DLH you have to do it. Well, one or two things I would like to say, because I'm not here to give an address, because we are waiting here to visit the study circle. We also have Mr. Kamal, who has come all the way from Delhi to address us and share his experience. One is the peer review. I think all of you must be aware. From 1st of April 2024, it is compulsory for all the firms having 4 partners and above. It was compulsory for 5 partners and above in the last year, but it got postponed to 1st of April 2024. Any persons who are sitting there as partners, and if your firms have not got it peer reviewed, my sincere request and suggestion is immediately apply for that, so that before 1st of April 2024 you have to get yourself peer reviewed. Otherwise, you will not be eligible to do the statutory audit as such. So I request all of you who have not got your peer review, firm peer review, please get it done. Then we are talking about global opportunities. Definitely India, Indian profession is growing beyond the boundaries, or I should say India. Recently, last year we had some FTA agreements, like free trade agreements between 3 countries, UAE, Canada, and now UK also has come forward, where hitherto as Indian professionals we were allowed to do accounting and finance profession, means accounting and finance we were doing that. But now with these FTA agreements, we will be eligible to do the auditing services in those countries on reciprocity basis, where those professionals also can come and do auditing here. We also can go and do the auditing in those countries as such. Instead of only accounting, we can also do the auditing profession. Some of the conditions for that is those persons who come from other countries to our country, we have to pass the CA examination. That with that MRA, we have an MRA agreement where other professionals come to India and want to pursue this particular or get this particular qualification. Instead of 8 subjects or 16 subjects which all of us would have studied and passed, they may have to write 4 subjects and they can get the CA qualification in India. Similarly, if we have to write some of the pass some of the courses where we have an agreement, instead of many subjects, maybe 2 or 3 subjects you have to complete, and you should get the qualification of those countries. And once you get it, there may be chances that we can do the auditing service also. Apart from that, that is on 12th of February, the new leaders have taken over. I think all of you must be aware. The president of institute is from Eastern region, CA Vijay, and vice president is from Northern region, CA Charanjot Singh Manda. Yesterday, all these committees were formed, and even I have been nominated by the president for various committees. I have been serving in all the standing committees. I am in the examination committee, I am in the finance committee, I am in the executive committee, all the 3 standing committees. Apart from that, I am also being given the responsibility of M&SS, the directorate, that is Members and Student Services, and of course I am the vice chairman of Direct Tax Committee. So whatever you feel that we can do or I can help you, either with respect to the member services or student services, or whatever, if you have anything to offer to us or suggest to us in any of the committees, not only in the committees which I am there, I may be working in so many committees, or I can get in touch with so many other colleagues. So anything is there, definitely please feel free to get in touch with me. And I can also request the chairman to organize 1 or 2 programs where we can have an interactive meetings with the members and students. We have been doing, like, I'll be getting a lot of calls, lot of, I should say, WhatsApp messages. Even our managing committee members also will be forwarding many things, and we will be addressing most of the issues. Maybe if the chairman feels once in a quarter or something like that, you can have an interactive session, and you can take that and do that whatever best possible for them. With these few words, once again, I thank the entire managing committee members to do a very wonderful for programs as such. As such, Bangalore is a very dynamic branch, being the largest branch in the country. Year after year, we are setting some standards or benchmarks, and I hope this year you will at least complete all those things and set a new benchmark. All the best.
Thank you so much, sir. It's time for the technical session, and today's first technical session is considerations in statutory audit for the period 23-24. We have a speaker, CA Kamal Garg from New Delhi for this. So before starting the session, we will end this formal session of the oath taking. So I thank CA Kota Srinivas sir for facilitating the oath taking. Thank Panaraj sir, who was here as SIC chairperson. CA Geeta AB, vice chairperson from vice chairperson SIC, for having gracing this occasion, and all the committee, managing committee members for coming here, and also to all of you for being here. Thank you. We'll now start the technical session. I request you to welcome him with the bouquet. Yes, yes. Audit documents. Yeah. CA Kamal Garg is a well-known name for the students of accounting and audit, and he is a fellow member from the Institute of Chartered Accountants, and he holds a degree of DSA from ICAI. He is also an insolvency professional from the Institute of Chartered Accountants. He is also a qualified social auditor for examination conducted by NISM. He was a board member of the Study Material Research Group in 2009 and 10. Sure. I'll keep it short. And he has been on the many committees of the Institute of Chartered Accountants, basically on the audit, corporate law and FEMA. He possesses a rich experience in the areas of corporate law, foreign contribution, joint ventures. It's our privilege to have you, sir. Thank you for accepting our invitation and being here. Thank you. For not having any welcome speech or anything, we will start with the technical session immediately.
afternoon to each one of you. And I'm glad that this new committee is being formed, and hopefully the committee will fulfill the dreams, the promises, and other aspirations being delivered over here. So straightforward, coming to the topic. Let me ask you first question before you ask me other question. PPT मिल जाएगा क्या? So in last 25 years of my journey, one thing which is constant is at the end of each and every program, members do ask, shall we get the PPT? I don't know what the members do for PPT, but yes, they do have a desire of having PPT. One small, simple, straight question. Topic given to me is considerations for statutory audit for the period 23-24, which is yet to conclude. How many of you can say this by heart and confidence that they completed their audit of 22-23 in the real sense and the right sense? At least on papers. Why this question assumes significance? Earlier, we were having a scary factor about NAFRA, National Financial Reporting Authority, or Quality Review Board, or Peer Review Board. Nowadays, we must be observing, and you must have experienced also, ROC activism. As of now, there are so many adjudication orders of registrar of companies across the nation. Just on 15th of this month, ROC Kolkata levied a penalty of 1.50 lakhs on the auditors for poor disclosures in the audit report. Are you aware of this order? ROC Kolkata, you can search on Google, it's viral nowadays. And the bad thing about Companies Act is, in Companies Act, no limitation period is prescribed. So in this very order which I am discussing about a bit is, the penalty was levied for the year 15-16 till 19-20. So 15-16 gone by, but still the penalties are levied. The inauguration for levying the penalty was done by ROC Patna. ROC Patna, the very first order of adjudication, maybe around 1.5 years or so, ROC Patna levied a penalty of rupees 10,000 on the auditors. I will discuss some of the orders over here in a case study shape. And what was the lapse? The lapse was, please don't mind my words, but I am telling a harsh truth. Most of the audit reports were found as copied, edited and pasted. Last year data was converted into current year data and figures, and the report was printed. To give you an example, what is your view? What is your view if company's audit report order is not applicable for the current year, but was applicable for the previous year? And due to some overlap, due to some overview, due to mistake, the CARO report was issued even for the current year. Are you getting my question? Normally what happens, we are simply reproducing CARO with the new set of data. Now the travesty is, last year CARO was applicable, current year CARO was not applicable. Auditors somehow overlooked to evaluate applicability of CARO, but CARO report was issued. Now the question arises, if CARO report was issued for the current year, will ROC levy penalty? Will there be a professional misconduct? And if yes, will you take the excuse that we have been extraordinarily transparent? I always believe that if in your body one bone is extra, that doesn't make your body a strong body. It will pain. The same thing goes with CARO also. That's a real fact. CARO was not applicable, but report was issued, the penalties were levied. Seeing your faces, I can say one thing. Most of the people must be thinking, when this seminar will get over, we'll get back to office and check how many reports were issued where CARO was not applicable. Maybe some of the people who are sitting may send a WhatsApp to their article assistants, check all the files, whether CARO was applicable or not. And in my experience, I must say last year, this lapse happened too much. The last year there was a confusion. Applicability of CARO on small companies. Because last year, if you remember, on 15 September 2022, the statutory limits of small companies were revised. We'll take a case study also. So this is agenda number 1. Agenda number 2, please don't search in Google and try to answer my question. The question is, obviously I will discuss in detail, but I am simply giving an index and warming up. The question is, most of the gentlemen sitting over here, most of the ladies sitting over here are statutory auditors come tax auditor of a client. Am I right? This is the traditional way of practice. If the companies say RST Private Limited, if I am the statutory auditor generally, I am the tax auditor also, subject to some exceptions which we are not getting into. Tell me very honestly, I am bluntly in these four walls. When you are appointed as statutory auditor, you have been given the board resolution and shareholders resolution as the case may be. Are you having the same set of board resolution even for your appointment as tax auditor? Are you getting my question? If I reiterate, say the company is RST Private Limited. RST Private Limited appointed Mr. X as statutory auditor. Now, without any discussion, without any discourse, Mr. X also presumed and the company also presumed that Mr. X is my tax auditor and the fees was decided. Letter of engagement was also signed. But the question arises, on what basis you are signing letter of engagement? So my question to the House is there any provision in the Companies Act? I emphasize Companies Act, I am not going into Income Tax Act. Is there any provision in the Income Tax Act which requires that if you are appointing one person as statutory auditor cum tax auditor, then board resolution is also required for such tax auditor? Again, I believe your faces are telling, again you are thinking whether we have this resolution or not. Question number third for the House. Question number third is, how many of you have evaluated, I repeat evaluated, whether you are disqualified or not from being appointed as tax auditor? Most of the population sitting over here, or maybe not most, maybe all of you, are of the view that disqualification for auditors are contained only in Companies Act, Section 141. How many of you are aware that disqualification of tax auditor is also there as a provision in Income Tax Act? Of late, traditionally, what is happening whenever seminars are being organized for taxation, we are much more focusing upon transfer pricing, TDS, tax audit nowadays, 43BH, but we are not focusing upon the governance part of tax audit. And this is nothing new. Finance Act 2015 made an amendment, and this disqualification of tax auditor is there since 1st June 2016. So we'll discuss all these issues. PPT I will be passing upon to Lata ma'am, maybe you can then circulate. But please, I would say, please be interactive. Not on a kind of fear factor, kind of learning factor. Because last week I was in Patna, and after the conclusion of seminar, the people who met me said, you were invited to teach us, but you came and you made us scary. So I would say, don't get scared. Only thing is, take this as a warning sign so that the regulator should not scare us. So I will start with this very first question. Please answer this question. So most of the issues which I will be inculcating here are the experiences in past and some of the mistakes of other people also. So we can learn from others' mistakes. Question number 1 for you. So the question is, belonging to Accounting Standard 15, most of us are having SME clients, and for that very reason they must be complying with accounting standards. And on the basis of those accounting standard rules 2021, I have this core question. Question is, RST Private Limited, it is having 25 employees and payment of gratuity act is applicable. No actuarial valuation was made for such employment benefit. The company and its auditor are of the view that since number of employees are less than 50, AS 15 on employee benefits need not be complied as there is exemption. In my experience, this could be with you also, most of the chartered accountants, most of the corporate houses also are of the view that if number of employees are less than 50, then there is no need to have actuarial valuation. How far the company and the auditor over here are correct in their view and understanding whether actuarial valuation is required or not? Let me give a hint also as an assumption. Let us presume RST Private Limited is a small company. So I am giving you two things over here. One is RST Private Limited is having number of employees less than 50, and number second, RST Private Limited is small company also. With these two things in mind, please tell me whether actuarial valuation is required or not. So ladies and gentlemen, not taking much of your time because I have only 4:30 as the clock time to me. What you need to remember, this 50 parameter is not meant for companies, is meant for non-corporate entities. Let us take an example. If you are doing tax audit or you are doing audit under LLP Act, then the accounting standards meant for non-corporate entities will be applicable. Companies' accounting standard rules will not be applicable. Accounting standards meant for non-corporate entities as pronounced by ICAI, they say that if the number of employees of a non-corporate entity are less than 50, actuarial valuation is not required. But the same kind of exemption, I emphasize, but the same kind of exemption, ladies and gentlemen, is not available to any company because what doesn't matter. So if you are having post-employment benefit plans, then actuarial valuation is required. Only one thing is, if the company is a small company, then disclosures are not required for actuarial valuation. You must have seen the balance sheets of big corporates. Very, 3-page or 4-page disclosures are there. Plan assets, insurance policies and so on. That disclosure is exempted for small companies, otherwise there is no exemption. I will suggest, when you will get this PPT, in the end of this PPT, one table is there. Exemptions from various accounting standards. So one of the exemption I have written a caution. The caution is, no exemption is there from actuarial valuation. So 50 employees parameter is totally absurd parameter for this purpose. 50 parameters there only for non-corporate entity. So for this purpose, in this PPT, the solutions are also given. The solution is the same. So no such exemption is there as far as accounting standard 15 employee benefits is concerned. Actuarial valuation is required. However, if the company is a small company, then disclosure exemptions are there. And I must tell you, ladies and gentlemen, ROC Patna levied a penalty of ₹10,000 on the statutory audit of a company, which I cannot name over here, for the reason being, the company made no actuarial valuation, and despite this fact, the auditor issued a true and fair view report, that is unqualified report. ROC served a notice to the auditor, show cause why penalty of money should not be levied, because you are saying true and fair view, but the company has not gone for actuarial valuation. Auditor confessed that he made a mistake, and 10,000 penalty was levied. The matter here is not the amount of penalty. You may say 10,000 is false penalty, but the fact is that your name is coming on radar. And just I was telling you a few moments back, on 15th of this month, 1.50 lakhs was also levied as a penalty. So minimum penalty is 10,000, which can run into much more amount on the basis of continued defaults. Because each default penalty is 10,000. So if in an audit report, 4 qualifications are required, and you made only 1 qualification, 3 qualifications were missing, 30,000 is the penalty. Section number 450. Section number 450 says, if no penalty is prescribed under any section of the Companies Act, then general penalty will be levied. So ROC is invoking section number 450, general penalty clause, along with section number 143, subsection 3. Section number 143 is about audit report, where we have to report whether the company has complied with accounting standards or not. By the way, how many of us understand accounting standards? That is the other question. So I will not go into that. I would suggest one thing, at least for this time in 23-24, please change the accounting policy segment, and change the words company's accounting standard rules 2006 to 2021. And these rules are effective from 1st April 21. So when you go to your office, please do check this kind of mistake should not happen. This is my question number 2, sir, please.
Now,
Sir, please, my sir.
yes, the question is, now suppose that if a company makes a provision for gratuity
Yeah.
based on the actual liability as on the balance sheet date, not actual valuation.
Actual liability.
It makes a provision for gratuity based on actual provision as the balance sheet date. And on the other side, you have got actual valuation.
Yeah.
In your practice, in your evaluation or in your experience, what is the difference really
See,
material?
In your question, 2 questions are there. First, I will start with that provision is made on the basis of actual liability. It does signify that in the past years, no provision was created on projected liability. So we do have opinion of expert advisory committee, as now it is clearly written in Section 15 also. The provision for gratuity needs to be provided on probability based approach. So each year we have to project whether any amount will be payable or not. So if you say that the amount was provided on actual liability, for that reason I would say in the past years there was a lapse. And this also answers your second question, that you have to create provision for gratuity liability on probability based approach.
From the point of view of quantification, let us say, now I will go one step further. not actual liability. I provide for all the employees, even if they work for 1 day, I will provide a gratuity.
That is not a problem.
Okay, I provide. Okay, based on the Payment of Gratuity Act, I get a figure X. Then actual valuation is done. A figure Y is there.
Yes.
How significant is Y minus X?
Difference.
X, the difference between Y and X. Particularly when I don't have any investments.
Yes.
If I have a policy, then yes, you have to make a policy. You have to
Right, absolutely.
estimate the income coming from my assets.
Absolutely.
I don't have any assets. I'm on a pay-as-you-go basis, and see, ultimately your actual valuation also is pure estimation.
That is true.
Yes, it's a pure estimation. So the gap, is that gap material enough for the auditor to qualify?
Let me clarify. Here we have to read AS 15, employee benefits, along with AS 29, provisions, contingent liabilities and contingent assets. So what is happening, sir? AS 15 says how to quantify and when to recognize. How to quantify and when to recognize. Now the question arises, if I have quantified rupees X on estimation basis, AS 15 will say recognize it also. But now other gentlemen will come and say that as per Payment of Gratuity Act, this is the amount. So in this very case, AS 29 will come to my rescue. How? AS 29 says we need to evaluate. Obviously it will be subjective because evaluation is principle based. You have to evaluate whether the given amounts of provisions are legal obligations or constructive obligations. In your case, let us assume both the provisions are constructive only because employees are not going. So in that very case, the other concept will come from S29, most likely amount. And that most likely amount will be provided, and it is purely based upon concept of prudence that provide for all the losses but anticipate no gains. So for instance, the estimated amount on actuarial basis is rupees S, let us give a figure, rupees 100. And legal amount which I computed is rupees 120. Obviously, I need to make an evaluation what is the most likely amount. Now in this most likely amount, to my experience, actuarial valuation will always be on the victory side because it is much more scientific. 120 is purely mathematical, but 100 rupees is much more scientific with some set of assumptions. Attrition rate, mortality rate, salary revision rates and so on. So depending upon that scenario, qualification may not be required. Rather we can emphasize. So I would suggest to the house that whenever you feel any kind of glitch about the provision, don't read a given standard in isolation, take the help from AS 29. Very beautiful standard. So in AS 29 I give a summary, sir. 3 things are coming out. Legal obligation, constructive obligation, and lastly, out of legal and constructive most likely amount. Things will be resolved. And one thing, good thing is, sir, in this very question which you asked, the question of qualification comes towards the end because there could be qualification when anything is contravened. There is no need for qualification when there is a difference of view. Whenever there is a difference of view but there is no contravention, always emphasize the report. SS 706. Shall I proceed, sir? Okay, this is the question now. So don't ask tough question. Yesterday I never learned my speech. I just forwarded the speech now. Anyways, this is the question for the house. Do you have board resolution for being appointed as tax auditor on the assumption that you are the statutory auditor of the same company? So as I told, that time also faces a time we don't have the board resolution, and hence I must come to this question: is there any provision in the Companies Act which mandates to have this kind of board resolution? Before I show and spill the beans, let me tell you one silver lining side. This resolution is not required to be filed at any regulatory forum. See this smile on your face. I think you must have understood the entire game. ADT is required to be filed, but this resolution is not required to be filed. But if a peer reviewer will come to your office, or NAFRA will come, or any regulator will come for review, but they will ask you first thing, You did tax audit also, show me the board resolution. And what auditors are doing, sir? They will show the letter of engagement. Letter of engagement is based upon corporate decisions. That decision must be in the shape of resolution, and for this purpose, we have section number 144. Section 144 of Companies Act we have read only halfway. Each one of the person sitting over here, if I say section 144, they will say services which are not allowed to the auditors. Ladies and gentlemen, in fact, section 144 starts in a different way. See the screen. I will come to these questions at a later stage. Section 144, beginning words, which we have somehow ignored always. An auditor appointed under this act, this means the Companies Act, shall provide to the company only such other services as are approved by the board of directors or audit committee as the case may be, but which shall not include any of the following services. So what we have read always is, we have noted the second part. Other services will include the following which we will have provide. The initial parts are only those other services that are provided which are approved by the board. So regulators will ask you whether your tax audit services are approved by the board. You will say yes, because you will show letter of engagement. This will be technically and legally wrong because there is no board resolution for the same. So I would suggest to arrange for this board resolution, and this will be helpful because no filing is required. This board resolution can be taken at any time before signing of the tax audit report. So this could be a win-win situation. And for this very purpose, let us have this kind of a case study so that you can understand what I am trying to convey. RST Private Limited is the company. You are appointed as statutory auditor at the annual general meeting, and you have filed ADT 1 for the same. You are also carrying out the tax audit of RST Private Limited. However, the same was not discussed at the board meeting or annual general meeting. So my question was, is there any requirement to have board resolution for appointment as tax auditor of the same company of which you are the statutory auditor? The answer is yes, by virtue of section number 144. So big story cutting short, in your file, that is audit file, you must have a copy of or certified true copy of section 144 board resolution for your continuity and appointment as tax auditor also. Yes, sir.
One question.
Sir, I am not able to hear you. Please. Yes, sir, it is applicable to all. Let us take a situation. Situation is, the company comes to you, you are the statutory auditor, and they say, please certify our 15 CACB. It is required for that purpose also. The company comes to you and they say, please review our quarterly results. Now, in this review exercise, there are two schools of thoughts. Review is also a part of statutory auditor by virtue of regulation number 33 of SEBI LODR. For this purpose, we did not have any special resolution. Special means the board resolution. But for other services, yes, it is required. And that is why I am highlighting this issue when I am a technical reviewer in FRRB in the last term, and most of these issues were raised by the regulators. But the fact is, sir, because all the chartered accountants or most of the chartered accountants are commenting this is wrong, it will become public interest. So these things need to be first of all educated. So it's a kind of awareness. And I must say, this will be invoked only when you are the statutory auditor. Otherwise there is no problem, no. Because the words are this actor. You are asking something?
Yeah. Statutory audit, the appointment is for statutory audit.
Yes, sir.
And they give the fees also.
Yes, sir.
So statutory audit so much, tax audit so much.
Yes, sir.
Will it amount to compliance or not compliance?
Where they give?
In the next one. Letter they will give for audit statutory.
What I am able to understand, in the letter of engagement, they are writing that you are our statutory auditor, fees is this much, and you are the tax auditor also, fees is this much.
But now resolution will not mention.
If it is not in resolution, to that extent, tax audit is not valid. That is a real case also, sir. Yes, sir. Yes, sir.
I would put it only very simple.
Yes, sir.
Because based on discussion, sir, I am enlightened. And I am going to see that all all the audits I am also appointed as a specific reason 144 clause will be inserted in future resolutions and etc. But if you are caught in a particular situation like this, my interpretation would be it is a board which can question why we should pay you the fees. That's all. Nothing more.
So that's why I asked second question also.
That is why we should pay you the fees for tax audit. I mean, who asked you to do the tax audit? Only board can ask the question. That's all that needs.
One good thing is that board is questioning the auditor, which generally board don't question. But why I am saying in your question, if I come back, why this is relevant now, sir? Earlier, why it was not relevant? The reason is, which I asked a question also, how many of us are aware about provisions for disqualification of tax auditor? If you go to section number 280 of the Income Tax Act, I am diverting a bit. If you try to recollect, section number 288 of Income Tax Act defines authorized representatives. Section number 288 of Income Tax Act defines authorized representative. Within that section 288, one of the authorized representatives is the word written as accountant. That accountant can also represent the assessee. This is the word accountant being written. Explanation below section 288 defines what is the meaning of word accountant. And what they did, from 1st June 2016, the word accountant as a definition was amended. Earlier the words were only accountant means a chartered accountant holding valid COP. Now what they have done, and shall not have the following disqualifications. If you read that section, you can check the Google also or the Bayer Act. The law says, sir, in Income Tax Act section 288 explanation, for evaluating whether the tax auditor is disqualified or not, divide the assessees into two parts. Company assessee, non-company assessee. I will touch upon company assessee only. I will not go to non-company because non-company theory is known. For company assessee, only one single sentence, sir. The single sentence is, if a person is disqualified from being appointed as statutory auditor under the Companies Act of this assessee, then is automatically disqualified from being appointed as tax auditor of same assessee. So nowadays the Income Tax Department is also asking this resolution. Had the Income Tax Department not asking or peer review board not asking, then the things was on a safe side. So my humble submission to the House is, fortunate part is this resolution of board is not required to be filed anywhere. The second fortunate part is this resolution will be obtained at any point of time before you issue the tax audit report. So at least keep the documentation done. And I must also emphasize, this resolution is required not only for tax audit, for all other services which are approved. GST will also come in, transfer pricing will also come in, and so on. The question is not here, who will see? The question is, when they will see, then who will see? In my experience, you know what happens? Our chartered accountants friends are the best enemies also. Like I will call my friend. Kamal came today, he was telling this resolution. What you will do? We will see what will happen. So 4 or 5 phone calls will go in our circle. And most of the friends will say, Jo hoga dekha jayega, we will see. Now what happened? Big Boss came in. Big Boss came in, out of these 5 friends, one friend was caught, ROC caught. Show me the resolution. The same gentleman who was caught will again call other friends. Yeah, wo notice aaya. ROC is calling. What to do? Then what he will say? Tu dekh le yaar. Please see yourself. So now what is happening? At that very time nobody will come. At least keep your paperwork strong. Now other part. How many of you are comfortable in Karo? I am skipping one slide. I will come back to this inconsistency wala area. Let us first touch upon Karo. See this question. The slides which I skipped, I will come back in a while. See this question. The company is XYZ Private Limited. You have been given 2 datas for 2324 and 2223. With this respective data, I have put in that Karo was applicable. Karo means Karo 2020 was applicable for the year 2023. So last year. That means for the year ending on 31st March 23, we issued Karo report. Now please tell me with this new set of data for the year 2324 whether Karo is applicable or not. I give you 30 seconds.
The borrowings I would say.
Sir, first analyze, I will say later.
No, borrowings.
Huh.
Based on borrowings I would say yes, but I don't remember the.
Yes. Applicable? Sure, sir. Okay. It seems like I am an auctioneer. How many of you say applicable? How many of you say non applicable? Let me give you the theory. I want you to apply your mind. So let me go back. See very carefully. Karo says in para number 2 that I am not applicable to private limited company. I am not applicable to private limited company if such private limited company fulfills all these 4 conditions. I repeat, Karo 2020 will not be applicable to a private limited company if all these 4 conditions are satisfied. If you see the word and is used in the 4 conditions. Condition number 1, the company, that is private limited company, is neither a holding nor a subsidiary of a public company. Condition number 2, the sum total of its paid up capital plus reserves and surplus is not exceeding rupees 1 crore at the end of year. I must tell ladies and gentlemen, the words used are reserves and surplus. So profit and loss account credit balance will also be included. And if debit balance is there, it will be subtracted. Condition number 3, borrowings and not all the borrowings. Borrowings from banks and financial institutions. So NBFC is also included. Borrowings from banks and financial institutions are not exceeding rupees 1 crore at any point of time during the year. The word uses borrowing, so it will include bank overdraft also. That means no need to make any distinction between short-term borrowings or long-term borrowing, secured borrowing or unsecured borrowing. Lastly, if you see very carefully, the word uses revenue, not turnover. Earlier in old Karo it was turnover. This revenue is not exceeding rupees, limits have also changed, 10 crores. Revenue is not exceeding rupees 10 crores. So if all the answers are yes, then on a private company, Karo is not applicable. Or I should say like this, if any of the answer is no, then Karo will become applicable to such private company. This is part 1 of my discussion. Now let us move other segment, small company. Karo also says I am not applicable to small company, and this is the real problem. Why it is not applicable? The expression small company is not defined by Karo. It is defined by section number 2, clause 85 of Companies Act. I will show you here. Just listen first of all. Section number 2, clause 85 of Companies Act, as originally enacted on 1st April 2014, what it states? A company other than public company. So one thing is certain, only a private company can become a small company. A company other than public company shall be a small company if following 2 conditions are fulfilled. Condition number 1, its paid up share capital, original I am telling, its paid up share capital shall not go beyond rupees 50 lakhs, original. And the word is and, its turnover of the preceding year P&L shall not go beyond rupees 2 crores. Originally, the paid up capital limit was 50 lakhs and turnover, mind you, what is turnover or revenue? And turnover limit was rupees 2 crores. The things kept on changing. The latest change happened on 15th of September 2022. Rule 2, Sub-Rule 1, Clause T of Companies Definition Rules at present states that the limits will be enhanced. For paid up capital it is 4 crores and for turnover it is 40 crores. So the new definition is before you now. See this new definition. Paid up share capital shall not go beyond rupees 4 crores. Turnover of the preceding year P&L shall not go beyond rupees 40 crores. And the following companies are never considered as small companies, Section 8 companies, Special 8 companies, and so on. I am not going to detail. With this very theoretical understanding, I have one segment of private companies, I have other segment of small companies. Let us come back to the case study once again. First of all, the step is, in this very question, analyze and evaluate whether for the year 2324, XYZ Private Limited is a small company or not. Forget about all other things. First check whether XYZ Private Limited is a small company or not. Let us analyze. Whether it's a private company, answer is yes. Question number second. Whether its current year paid up capital is less than rupees 4 crores, answer again is yes. Now in real world of mistake what is happening is turnover. Turnover of current year need not be checked. Current year of preceding year has to be checked. In haste, we are checking turnover of the current year and that's how wrong conclusions are coming out. If you see the definition also, turnover as per preceding year period. So current year paid up capital, last year turnover is the criteria. Now coming back to this case study, current year turnover is less than 40 crores, but it is relevant? No. What is relevant is last year turnover. And last year turnover is 44. So it is not a small company. Now because it is not a small company, what I will do? I will go to the normal conditions. Normal condition says the company should not be holding subsidiary of public, which it is not. Second condition is paid up capital plus reserves or surplus shall not go beyond rupees 1 crore. That is also fulfilled. Third condition, borrowings from banks and FI shall not go beyond rupees 1 crore at any point of time. It is 3 crores. And that's why car became applicable. Now let me make a small twist. What I am doing now, this is 44 crores. It's not working. Let us assume it is not 44 crores, it is 34 crores. Let us assume it is not 44 crores, 34 crores. The value of it I use 34 crores, it will become small company. Now my question to the house is, what shall we say now? Shall we say that Caro is not applicable because XYZ Private Limited is a small company? Or shall we say that Caro is applicable because it is a private company whose borrowing is more than rupees 1 crore?
Not applicable.
Answer not applicable, it's correct, but reason.
Conditions are odd, but the purpose of applicability of Caro?
So question is, shall I exempt because it is a small company, or shall I say Caro is applicable because it's a private company whose borrowing is exceeding rupees 1 crore? Normal condition.
Because it is not company, it is exempt.
It is small company, hence it is exempt. Is it written somewhere?
ICI guidance.
ICI guidance note. Para number 12, ICI guidance note on Caro specifically states that once a private company qualifies as a small company, there is no need to check general conditions for Caro applicability in private company. Why this is important? It's a real world confusion, and especially this confusion is prevailing at length on WhatsApp University. On WhatsApp University what is happening, some members say Caro applicable because borrowing are more than rupees 1 crore. Some say Caro not applicable because small company. No majority counts, rule of majority prevails on WhatsApp University. But you need to understand, once a company becomes small company, Caro will never be applicable. At least for that year, because next year the things may go otherwise. And when Caro is not applicable, in the regulatory requirements paragraph in audit report, we have to mention, we report that Caro is not applicable for the current year because it's a small company. Matter over. I believe the things are clear. So what is the crystal line? Crystal line is, step number 1, check it's a small company or not. Step number 2, it's a small company, then nothing doing. Caro is not applicable. Lastly, if you see small company definition, the word is turnover, right? If I go back to Caro, the word uses total revenue. Is there a difference between total revenue and turnover? It is very important. Let me tell you. The expression turnover is defined by section number 2, clause 91 of Companies Act. In our chartered accountants, income tax and GST is so much traveling in DNA that the definitions of Companies Act are also defined as per taxation laws, and that creates a trouble. So we need to understand the expression turnover. I repeat, the expression turnover is defined by section number 2, clause 91 of Companies Act. And section number 2, clause 91 says that turnover means the revenue recognized from sale of goods or rendering of services on the basis of applicable accounting standards. So turnover means turnover is equal to revenue. That is total sales. When I say total revenue means sales plus other income, like interest income, rental income and so on. So for the purpose of Caro, you will include total revenue, normal sales plus other income. But for the purpose of small company, turnover is only relevant. other income will not be included. That is very critical. Because the very moment you will add other income, it will be on a higher side. Somebody may have a wrong conclusion that it's a small company. So be very careful. Don't apply the formula in your Excel sheet by clubbing the two amounts. For small company only one amount is written, that is turnover. How many of you know, I am coming back to the previous two clips which I left out. How many of you are aware that what are the prominent inconsistencies in the director's report and the audited financial statements? And hence the topic is inconsistency in notes and board's report. Let me tell you the background for this very issue, then we will discuss in detail. The background is like this. If you go to section number 134, subsection 3, this deals with director's report. I need to be specific. Section number 134, subsection 3, clause J, and section number 134, subsection 3, clause K. I will display here also, first listen. Section number 134, subsection 3, clause J and clause K respectively state that the director's report shall state, number 1, whether for the current year any profits are proposed to be transferred to reserves. And number 2, whether for the current year any dividend is proposed or not. That is what the requirement section number 134 is. The same requirement, ladies and gentlemen, is there in schedule 3 also. Schedule 3 also says in notes to accounts, please disclose whether any profit is appropriated to reserves or not. And number 2, whether any dividend is proposed or not. Those who are seniors may recall, in earlier days we used to have P&L appropriation account. So now that thing is traveling to disclosures also. In real world what is happening, because we are having ready-made formats of director report, generally in director report people are writing no profits are proposed to be transferred to reserves or no dividends are proposed, depending upon situations. But most of the cases this is happening, especially for small companies, dividends are not recommended in general sense. But the same disclosure is absent in schedule 3. And for this schedule 3, auditors are reporting true and fair. Ladies and gentlemen, we do have one auditing standard SA720 which is applicable to all the companies because what doesn't matter, and SA720 says if there is inconsistency in the audited financial statements and the board report, auditors have to deal with the same. How to deal with the same will be our discussion agenda. So for that very purpose, just have a look out on this background which I just orally delved upon. If you see the first segment, board report, section 134, 3J and K, what they say, board report shall state the following amounts if any which it proposes to carry to the reserve, and number 2, the amount if any which it recommends should be paid by way of dividend. On the same fashion, on the same line, schedule 3 also requires in notes we have to disclose the following: balance in statement of P&L, disclosing allocations and appropriations specifically on transfer to or from reserves, and number 2, the amount of dividends proposed to be distributed. In real world, what is happening is second part is not there. Now, if second part is not there, what does this signify? Inconsistency is bound to happen. Now, for this inconsistency, problem arises. Problem number 1. The problem is the date on which I am signing my audit report. Director report is available in draft format. If director report is available with me, problem is not there because I will see the inconsistency and matter will be resolved. The real challenge arises the date on which I am signing the audit report. The draft director report is not available. I will sign the audit report, then directors will read my audit report, and then in the director report they will also write comments on the auditor's report. So technically, legally, logically, the director report is not available on the date of signing audit report. Then what to do? I would suggest each one of the listeners, please download SA720 from idci.org, do Ctrl F and write illustration number 4. In the illustration number 4, you get the format, and please use that format. I will show here also. So what you have to do, even today you are doing, but in a wrong manner. In the audit report, you will give a paragraph, other information paragraph. Below that other information paragraph, you will say with folded hands, your lordship, on the date of signing audit report, I am not having director report. How you will say? That will be the wording of illustration number 4. See this red box. I am reading this first paragraph. Title in the audit report, independent audit report, then sub captions will be coming up. One of the caption is other information. In this first paragraph, you will be writing like this. Listen my words carefully, correlate with the words here. The words are, those who are there may not be able to see, I am reading. The company's board of directors is responsible for other information. In my example, other information is director report. The other information comprises the director's report but does not include financial statements and our audit report thereon. So in the format they are writing X report, I am saying director report. This red box is very relevant now. I will be writing as an auditor, which will be my safeguard. The director report is expected to be made available to us after the date of this auditor's report. So directly what you are saying, I am not able to identify inconsistencies because on the date of signing audit report, this report is not available to me. And the good thing is, when you will issue the audit report, director report will come to your office and you will find some inconsistencies. These need not be reported in the audit report, only need to be documented. So I would suggest and reiterate, go to ICA.org, download SA 720. No need to rush here and there, simply focus upon illustration number 4, very good illustrations, and take the language of reporting over there. Those of you who are the auditors of listed companies, for them I need to give a tip. For unlisted companies, director report is relevant. For unlisted companies, director report is relevant. For listed companies, one of the report context is MDA report, management discussion and analysis report, that also need to be factored in. Now, recently, in April 2023, precisely date I will check. In April 2023, NAFRA came up with an order which we all need to comply. And what NAFRA stated, that you must have in your working papers board resolution approving financial statements. So I am reading the bare context. You see here, this is NAFRA's order. Dated is 12th April 2023. What NAFRA stated, as per section 134 subsection 1 of the Companies Act, approval of financial statements by the board and its signing by the persons authorized by the board are prerequisites before an auditor makes a report on such approved and signed financial statements. Now what NAFRA stated, accordingly, the auditors shall have to obtain a certified copy of board resolution approving the financial statements and authorizing the directors to sign the financial statements, and should have kept the same in audit file before its assembly. Yes, sir. Please.
Here in fact, I don't know, these banks, all the banks, as per the RBI instruction, they don't give the copy of the board resolution. They told one partner, you have to designate one partner, and partner has to go through all the board report, and he has to make the note. In fact, in one bank, we have qualified this, that the board report was not made available.
And that is like a course, sir. Qualification is the last and the best recourse. But the fact is, in this audience, I don't know whether I should say these words or not, but how many of the auditors will take the guts and the pain to qualify?
Yeah, next year onwards, RBI made a circular to that bank. You please give the resolution. Not RBI mentioned that it need not be given as a copy, but it can be given. The partner has to, you have to fix the partners of the 3
Yes.
people, and he has to take this. Of course, most of the listed companies they will give.
Yes, and more importantly, NAFRA rules are applicable to the auditors of banking companies also.
Yeah.
So for that very reason, this could be also helpful, and your RBI circular will also be helpful, at least for this year. How many of you have incorporated new companies? I came to know Bangalore is a hub of startups. So most of you must have incorporated new companies. I can see the gentleman smiling, so must have made a lot of money this year by incorporating the companies. I have 1-2 questions over here on newly incorporated company and subscription money. Before I spill the beans and theoretical part, let us assume we all are into CA final and see this question. Thankfully, after qualifying CA, no need to give other exams, otherwise it will be tough. So the question is before the house. RST Limited was incorporated on 28 December 2023. The subscribers undertook to bring rupees 5 lakhs as subscription money as per the requirements of Section 10 capital A of the Companies Act. You must recollect. Section 10A says that if a company is newly incorporated, within 180 days of company's incorporation, subscribers have to bring in subscription money. That is what Section 10 capital A states. However, what happened in this question, the amount was not received as at 31st March 2024. How should this be reflected in the financial statements for the year ending on 31st March 2024? This is first part of the question. This is accounting. Now let us come to the auditing side. For auditing side, the questions are, what is the auditor's responsibility if? Now two sub questions. Question number one, the amount was still not received and the audit report was signed on 18th June 2024. And number second, the amount was still not received and the audit report was signed on 18th July 2024. Before you answer this question, let us move step by step. First of all, tell me, in this question I am writing that company was incorporated on 28 December 2023. As per your wisdom, on which date the financial year will be closing for this newly incorporated company? 31st March 24 or 25? 21st March 24. We all are on the same page. So section number 2, clause 41 defines financial year. And as per this section, what it says, if a company is incorporated on or after 1st January, then the financial year will be ending on 31st March of the next year. So in this question, the 31st March 24 is the financial year closing date. We always have learned that auditing begins where accounting ends. So let us first pass the journal entry, if any, in your mindset. Will there be any journal entry required in the books of accounts for this rupees 5 lakhs? Yes. Yes, Kamal? Yes. Sir, journal entry. What will be journal entry?
Subscription money receivable to paid up capital.
Subscription money receivable account debit to paid up capital account. Have you listened to my earlier seminar or do your part is related?
This is my all seminar. This is my first session.
First session. I don't know, but I am not able to believe you.
Because we had a practical session.
So it is like Pan India ever, you are the first person who answered this question in the first stand, and that is correct. Let me test also. Subscription receivable account debit. Perfect. Why we are crediting it to paid up capital?
Because we would have called and then amount was not received.
Because they have subscribed to their commitment to pay the money. They are subscribed to the
Subscribe.
So one thing is certain, answer is correct, but this paper was not leaked. So you can take a note of one section, ladies and gentlemen, section number 2, clause number 64. Section number 2, clause 64 says paid up capital is of two types. De facto paid up, deemed paid up. This amount is deemed as paid up. Logic is same because ultimately substances it will be bringing in. So entry will be subscription money receivable account debit to paid up capital account. Now accounting ended, financial reporting starts. So accounting in the books of account tell us software. Now let us come to Excel sheet presentation. Presentation में schedule 3. Paid up capital no problem, shareholder funds. Subscription money receivable. Please don't say that I will show it on asset side. I know it will be on asset side. But asset side, which caption? Which category? Current assets or non-current assets? Current assets. Below the current assets, we have some more sub-captions. Short term. This is known as too much of knowledge is also dangerous. A thing which is not written, we are writing on our own. Modi ji gave us one law, you take us many laws. Current assets, and then below the heading current asset, other current assets. And then in the notes you will give a description also that this amount represents this kind of arrangement. Now let us come to the second part of discussion. If you see very carefully, as on 31st March 2024, 180 days have not expired. 180 days will expire somewhere on 26th of June 2024. Am I right? 2025. Now, auditor is now in trouble. As an auditor, if you are signing on 18th of June 2024, will there be any issue? And if you are signing on 18th July 2024, will there be any issue? As far as 18th June is concerned, ask yourself whether on 18th June any contravention has taken place. Yet to take place because 26th June is yet to arrive. And hence, whether you will issue clean report or you will issue some modified report. Emphasis of matter paper. Now please listen very carefully. SA 706 states that emphasis of matter paragraph is issued when few conditions are fulfilled. Condition number 1, the matter is fundamental to the users of financial statement. This matter is fundamental. Your promoters are involved. Company's capital is involved. Matter is fundamental. Number second, the fundamental matter which you have a point is already disclosed in notes to accounts, already disclosed. And number third, such fundamental matter is requiring no qualification because there is no contravention. In this, no contravention is taking place, hence we will do emphasis of matter paragraph. What we will do? In the audit report, we will make a paragraph heading emphasis of matter. Below that, what we will write? We draw the attention of users to note number XYZ of notes to accounts regarding subscription money receivable, the date of which is yet to expire on 26th June. Matter over. The language could be different, but title will be same. Emphasis of matter.
So even whether emphasis in itself is required, so because 180 days is not expired.
Emphasis is required because SA 706 says that if you are near to the going concern, but you are yet to go there, always emphasize. Now why going concern, you will get to know from second question. In second question, ladies and gentlemen, the date is 18 July, 180 days expired. For sure, each one of us will qualify that section 10A is contravened. Undoubtedly we will qualify that section 10A stands contravened. But you know what is happening in real world? Most of the chartered accountants as auditors are not commenting upon going concern. Section number 248, subsection 1, clause D. Section number 248, subsection 1, clause D. Companies that says that if section 10A is contravened, then registrar of companies can strike off the name of the company after providing a reasonable opportunity of being heard. What does it signify? Even on 18 July 2024, there could be a possibility that ROC might not have served you show cause notice. But triggering moment has taken place. And because triggering moment has taken place by virtue of SA 570, ladies and gentlemen, SA 570 deals with going concern. SA 570 says, in the audit report, you will make a separate caption, material uncertainty about going concern. And below that you will write, the company's going concern may go into question the very moment ROC notice will be issued. I would recommend the House to refer three things over here. One is section 10A, then is section 248 1D, and in the last, SA 570 for reportable language about going concern. So in my experience, what I observed in life, people are commenting section 10A superiorly, but most of the people are forgetting to report or missing to report upon going concern. How many of you people love share application money? Especially seniors. There was a time, late 90s, share application money was a favorite of chartered accountants. So let me come to this share application money, then I will come back to some other questions. Give me a second. Yes. So topic is share application money. Again, let us see what happens in real life and why do this could be a value addition. So I give the House this question. Companies RST Private Limited, and there is an extract of balance sheet. If you see very carefully, RST Private Limited received share application money on 15 January 2023. Amount was rupees 1 crore 400 lakhs. This amount you can see was reflected as share application money pending allotment as of 31st March 2023. This amount still continues as such on 31st March 2024. So question is, what are the reporting considerations for the statutory auditor to be considered for the year ending on 31st March 2024? Let me emphasize one very great thing in this question. It is share application money which was received last year, 15th Jan 2023. Deposits? Anything else? You know, when audience don't answer, now it seems audience is thinking, wait for 30-40 seconds, speaker automatically will reply, and that's why he is here.
First is whether cargo is applicable or not.
Cargo, let us assume, is applicable, or let us take both the assumptions, applicable and not applicable.
Okay, now
One is the provision for interest.
Okay.
Second, I think should be.
You are a rank holder in CA?
Sir.
No, I am getting complex. Nice answer. Interest provision. See, in this question, let us first understand simple things. One gentleman said deposits, you said interest. Let us first understand this thing. If you go to companies, acceptance of deposit rules, we have rule number 2, sub rule number 1, clause C, item 7. In simple words, deposit rules. What it says, if a company has accepted deposits, private, public doesn't matter. If a company has received, not deposit, share application money. If the company has received share application money, public, private doesn't matter, then such share application money shall be allotted within 60 days of the receipt. If it is not so allotted in 60 days, it must be refunded in next 15 days. If it is not so refunded, then from next day onwards, it will be deemed as deposits. Now in this question what happened? 75 days passed. Money is yet to be refunded. And that's why there is a contravention of section number 73. Now, sir said, CARO. If CARO is applicable, deposit rules contra means, sir, para number 3, sub-para number 5, reporting will happen.
I will just give a slight twist.
Just a second, sir, let me complete my theory, then I will take a question. If CARO is not applicable, at least there will be nothing in CARO, it will be coming on face of the audit report, the qualification. This is number 1. That deemed deposits are there, number 1. Number 2, we do have section number 42, subsection 6, which he was telling. The lawmakers have stated, if default of this nature is there, refund has not taken place, sir, then whenever you will repay, you have to add on 12% per annum interest also. So, as an auditor, I have to check whether company has made a provision for interest payable on this money at the rate of 12% per annum or not. Answer, this is a legal obligation. No other option, no. Having said that, this is first part of discussion, that is deposits. Please see very carefully and try to recollect auditor's report section number 143.3g. Section number 143.3g says, auditors have to report whether any director is disqualified or not under section 164, subsection 2 of the Companies Act. See this very carefully and check whether any of the directors or all of the directors, I should say, of RST Private Limited are disqualified or not under section 164.2. I am not saying subsection 1, subsection 2.
It is deemed as public limited company. It will not be a private limited.
So this is the old Companies Act. The public company in this very case was becoming an old company because of 43A. Now it is not happening.
First thing, sir, this share application money, it can never come from the public.
It can come as a private placement also.
It can never, in the case of private company, it cannot receive any money from the public.
Agreed.
Yes. Now if you go to section 74,
I said section 73, not 74.
Say 73. You go to 73. The first subsection says,
on and from the commencement of this date.
From the public. So, I will first advise the company to get a legal opinion. whether this money is money received from the public or not received from the public. And then suitably,
suitably के बात तो सारी
because this particular thing is there are two reasons why this company's acceptance of deposit rules came. One is not to allow public to be fooled. Second
and not to the regulators to be fooled by taking money from HUF.
No. Second is RBI wanted to see that these people went to banks. It was more to so that they don't go for other sources of finance.
That is true, sir.
That's why the main reason. So one was not a first thing. So ultimately the purpose was not to allow the public to be fooled, but it is being used more of what should I say?
I do endorse your view, but the fact is, when it comes to private companies on one hand cannot accept public deposit. That is what the definition itself says. But private company can accept deposit from other people also, members, directors, and so on. Now take a situation. You are running a company, ABC Private Limited. I am a private equity player, and I invested through share application money. So lawmakers are also protecting this kind of private investor by deeming it as deposit. I am not saying public deposit. And that is what the change is there between 2013 law and 56 law. Everything there was public deposit. Here, deposits are having shapes. Public deposits and other deposits. In other deposits, that's why, sir, what the law says, which was there in old company law also. If you are taking money from director, on the declaration that this is his own money, it will not be taken as deposit. Earlier law, it was said public deposit. Now, in this question, if for the sake of theoretical debate or otherwise, we can say that, or we can assume that this money is from some private equity investor or from some of the friends of director, the private placement, section 42, then what will happen? So, lawmakers say if this default happened in a 75 days window, then we will consider it as deemed deposit and all the triggers, penalties of deposit mutatis applicable. And that's why one part is that it's a deemed deposit, number one. And never ever said deemed public deposit. That will be technically wrong. Number second, interest provision. Number third, respect. Whether directors are disqualified? Answer is yes. Try to recollect section number 164.2. Let me help you. Section number 164, subsection 2, sir, is having two clauses. Number A clause says, if a company has made annual filing default for 3 continuous years, the directors will be disqualified. Clause number B is applicable here. Clause number B says, if the company has defaulted in repayment of debentures, interest thereon, deposits, not public deposit, deposits, and or interest thereon for a period of equal to 1 year or more than 1 year from due date, directors are disqualified. Exactly 1 year has passed. So what is happening? Directors are also getting disqualified. In real world, when we analyze the balance sheets and financial reports, what we found, people were correct in reporting the first part, but director disqualification was not reported. And the real challenge is, in our audit report, in section 143(3)(g), what we are writing, on the basis of representations received by us, we report that none of the directors is disqualified. And this may lead to professional misconduct case. That you have relied upon a representation without checking it. So be very careful if this kind of thing is there. So what you have to see is simply see the balance sheet and check whether this kind of amount is pending or not. Yes, sir.
Sir, director disqualification you mentioned. If annual return is not filed for 3 years.
Annual return and annual accounts.
And annual. Now let's say for March 20 it is not filed, 21 is not filed, 22 is not filed. And you are signing the balance sheet as on 31st August 2023. Now, would you treat it as
so
what is the time limit that
director disqualification is checked on balance sheet date. On this very balance sheet date, the last year's annual filing due date is yet to come up.
Yet to come, yes.
So in that very case, there will be no disqualification, but for next year there will be problem.
So only for 24 it will be?
Yes.
23 it is okay.
Now, so my alarm rang up because I have to leave, but I will touch one topic, audit trail. The very moment I said audit trail, sir, pushed up his sleeves. See, I will not go deep dive into audit trail, but I have to highlight certain issues for which misconceptions are implanted. To ask these things, Hegde sir, I will take 2-3 more minutes. So one question is, please think very, I should not say legally, but logically. At least we all agree that companies are under a mandate, and so are the auditors as well, for ensuring that audit trail compliant software is being used from 1st April 23 and onwards. Cut-off date is 1st April 23. Unlike last year, this issue is more relevant nowadays. Now take a situation and please be very focused on my question. Financial year 2022-23, statutory audit was going on in first 3-4 months of 2024, it happens. So financial year ended on 31st March 23 and the statutory audit was going on, let us say in June 24 also. Sorry, June 23 because 2024 financial year. Now what happened, say I am a company, sir is my auditor. When he was carrying out statutory audit of 2223 in the next year, 2324 June period, that is June 23, he suggested, Kamal, I found certain observations of financial report 22, 23, please look after it. I went through the observation, what I found that my auditor is saying that I have wrongfully valued my inventory. Or he suggested the provision for bad and doubtful debts is not properly computed. Or he suggested that certain Ind AS are not properly applied. Or these kind of suggestions, depreciation is not properly computed, whatever. Now, when these audit remarks are given to me, I sat with my team and decided that I will rectify the situation, which I can. Now, ladies and gentlemen, the question is, prior to his observations, the closing balances were appearing on 31st March 23 and then became opening balance also on 1st April 23 because accounting started, no. After his audit observations, our team decided that we will rectify the situation inside our books of account, which is allowed. Don't you think when I will be incorporating his observations by virtue of Essay 260, communication with Gochali governance, in my books of accounts, those closing balances which were already there will undergo a change, and if they will undergo a change, on 1st April 23, the opening balance will also have a corresponding change impact. Yes or no? And if this is the case, whether this needs to be captured in audit trail or not. I will not name the software here because it is not the right platform. As an auditor, please do check whether the accounting package the client is using is capturing this audit trail or not. Change of closing balances and opening balances correspondingly. In my experience, the noun softwares are not having this kind of feature. If they are having, then it's a good software. Second question. If you try to recollect proviso to rule 3, sub rule 1, company accounts rules, I am emphasizing accounts rules. It says only those audit trail compliant software shall be used which cannot disable audit trail feature. If you come to auditor's rules, rule 11G says auditors have to check and ensure that, and according to the report also, that audit trail has not tempered. The word tempering is not used in accounts rules. The word tempering is used in auditor's rule. So question arises, what is the meaning of tempering? One thing is certain, tempering by default comes with malified intention. You generated audit log file, you made a right click, opened up it with MS Word or Notepad, and you deleted some of the log entries. It is tampering. And if this happens, it needs to be qualified in Rule 11G. And third, last question before I conclude. This is not with the audit trail requirement. How many of you are aware of this question? Question is, when you do revenue audit or sales turnover audit, as per auditing standard, what presumption should be kept in mind for audit of revenue? And when I say presumption, for this presumption you must have adequate working papers also. Please take a note, whenever time permits you, please refer the same in office. Para number 26, SA240. SA240 stands for Considerations about Fraud and Errors in Audit of Financial Statements. Para number 26, to be very specific, of SA240 states that whenever auditor audits revenue, he will always presume that revenue suffers from elements of frauds. What is the meaning thereby? When I will check sales turnover or revenue, I will always take a presumption that there is a fraud into it. So I have to negate, I have to rebut that there was no fraud, and for that rebuttal, I need to have adequate documentation. Now, what kind of documentation is required? For this purpose, you have to refer para 47 of SA240. So 2 paragraphs I would recommend each one of you to please go through. Whether your company is small client or big client doesn't matter at all, because it is applicable equally to all. Para number 26 deals with presumption about fraud in revenue, and para number 47 deals with documentation about such presumption rebuttal. Essay is essay number 240. By the way, how many essays are there? This is the toughest question. So I would say, if you have any question, you can ask me even now or maybe at a later stage. My contact number can be taken from Srinivas sir, a good friend of mine, and thank you Srinivas sir for taking me to Bangalore once again after a long time. But by the way, I am looking smart or not? So audience, any question from your side? Yes, sir.
Regarding the opening balance,
Yes, sir.
normally we start with the audited financials of last year to check the
Yes,
opening
sir.
balance.
Yes, sir.
So we start with the last year's financials to check the opening balance of Garg. Yeah. So as such, see there are two ways in which the opening balance could be found. The software is continuous.
Yes.
It starts from here, so and so, and the transactions keep on happening.
Yes, to automatically carry forward.
Yes. Or a fresh books of account starts with the opening balances. There are two possibilities of opening balances, and that should not be a criteria for making a differentiation. So ultimately, opening balance we are checking with the signed balance sheet.
True.
We don't care what we don't care what changes happen in the earlier years.
Maybe sir, I was saying something else. The last year closing balances are yet to be freezed as audited financials. What happened? 31st March, like come to this year, 31st March 24 concluded, sir. This financial concluded from management side, not from auditor side. Now, when you will do audit of 2, 3, 2, 4? Next year only, no? April, May, June, July, that hoga. When you were doing the audit, you came to some remarks and you advised the management, please look after these remarks, else I will qualify the report. It is this very stage that the balances were changing. That I was pointing out. Not the audited freeze balances. If audited freeze balances will get changed, then there will be headache. Then we will come to another standard SF 510 opening balances.
And the software which you didn't name.
Yes.
Sometimes the accountant sleeping will put the wrong year in.
Accountant, one more question came to my mind from accountant sleep. I don't know whether it happens in southern India or not, but it is quite prominent in northern India, especially in Delhi. You must have heard of an area, Chandni Chowk, near Red Fort area. So there is a practice over there, sir. Accountant will make a weekly visit to the office, and that businessman is a company wala. A small tiny company, like let us say for example, Srinivasa and Sons Private Limited. So small company, accountant makes a weekly visit and do some punching of data on the software which is having laptop, and he will walk away. Question arises, if the company is availing the accountant services who makes weekly visit, whether audit trail is required there or not.
Audit trail is required for all the transactions. There is nothing to do.
Now, that is the thing which we have to, sir, capture. The law says, if you see rule 3.1, the company which uses accounting software, here company is not using, company is availing services. And for this purpose, ladies and gentlemen, if this kind of client is there, please be very, very careful for reporting audit trail. And for this purpose, because time is running out for me, otherwise this was a very interesting question to discuss, please refer SA 402. SA 402, sir, says what will happen when accounting work is outsourced. In that very case, this audit trail para will undergo a very tremendous change. And more importantly, sir, as a chartered accountant, I am saying, not as an auditor. Sir, if the books of accounts are being kept by the accountant, he will take away the laptop when he will leave the office. Don't you think the books of accounts are not kept at the registered office? The books of accounts are not kept at the registered office. Section 128 violation also. As an auditor, why I am saying, so let us assume my friend Srinivasa sir reported by virtue of SA 402 that audit trail evaluation is not possible because third party vendor was being used. ROC will say very good, happy. He will issue a notice to company. If your books of accounts are being kept by the third party vendor, there is the board resolution for shifting the books of account third party vendor. So please be very careful because this kind of trail, otherwise you will start as an auditor for the company. So like sir was saying, and I am also emphasizing, if third party vendor is being used, audit trail para will not be applicable, and for this purpose details you can find in SA number 402. So thank you very much. My pilot is calling me. I have to leave because airport is too far from this place. Adventurous journey, sir. From Delhi to Bangalore and then from Bangalore to this place. Airport to this place. So yes, sir.
One of the private limited company, husband and wife are the directors.
Has appointed further directors.
They are a husband and wife are the directors.
Okay.
They are also in the partner in one of the LLPs.
Okay.
The LLP incorporated in 2018.
LLP was founded in 2018.
2018.
Okay.
From the date of incorporation, LLP didn't file the annual return.
Annual didn't file the annual return, okay.
You cross check with they are disqualified as per section 164 subsection 2 of the Companies Act.
Right.
Same is reported in our report, section 143 and later.
Right.
Even though our intimation, the director is signed the balance sheet. This balance sheet is valid.
So this balance sheet is not valid. Because when he is disqualified, he is deprived of all the powers.
Okay, sir. As an auditor, we reported in say.
As an auditor, you disclaim your opinion.
Disclaimer
It is
opinion.
the question of
Okay,
audit
sir.
report. Balance sheet itself is not signed by
वही
director.
बता रहा हूँ मैं उनको, वही बता रहा हूँ. The same thing only I tell sir. Why are you?
That's it.
First, sir asked me tough question. Half of the speech washed out. But really nice audience I found over here, quite interactive, and maybe this audit season would bring in plenty. And being a speaker, you know, we have a kind of intoxication to keep on speaking. So before I leave, finally before I leave, when I came here, Srinivasa sir, Kota sir was there, Apandana sir was there, and our Hegde sir was also there, and he was making some good presentations. With due regards, big things were discussed and were stated, and we must always think big. We always think of being global. How many of you in real sense have exploited and harnessed 1% of the local things also? In my experience, Secretary Saab, what happens, whenever we tell new opportunities to chartered accountants, no, in seminar they will listen. At tea coffee break they will come and they will say, in Hindi I will say like this, हमें अभी फुर्सत ही नहीं है अपने काम से, that we don't have time from our own existing work. Oh, quite identical situation. Chartered accountants on one hand are saying, no opportunities, no work. On the other hand saying, we have no time from this work. What will happen? And with this very background, how many of you know about social listing? Have you heard about social listing? Quite a few, I believe, because the voice is quite low. Why we people as chartered accountants are not advising our so-called clients to go for social listing, and more specifically, a concept whereby chartered accountants can mint a lot of money, can guide the clients at sensible level, and good thing is, merchant banker's role is almost negligible here. And for this, no need for any classes or no need for any seminars. You can have a reference to BSc website, many things will get to. Social listing. Now what is social listing you can see? For example, you have trusts, you have Section 8 companies, they can get themselves listed. If I say ISKCON Temple can be listed on BSc. How many were able to believe? Now we have to believe, it is possible. You must be having charitable trust. Those chartered accountants who are smiling, I know why they are smiling, because they know 10 and 10B, Section 12, 11 and all these things. Why don't we advise these clients to go for social listing? Question number 1, as a suggestion. Please explore social listing. Number 2, you must be advising your clients for financing, project finance, bank finance. Why don't you collaborate between the banker along with the client for sustainable finance? Sustainable finance is our concept, and this can be done within India itself. Now what is sustainable finance? Please do check. Nowadays you must be listening like Pramodji, must be listening all these things, ESG, and environment, society, governance. Please explore this area.
That we were doing since 1500 years.
Yes.
ESG, what?
Well, the thing is, we have to do so.
Yeah.
Number 3. एक दिन पहले बुला रहा था आपको. Number 3. How many of you know how to get work or assignments from Asian Development Bank, ADB? Please understand, all these things are not meant to be seen or read in newspapers. We can get a lot of work from Asian Development Bank. I would suggest, if my words have some value for you, go to website of Asian Development Bank and search empanelment as consultant. You will get 2 options, individual consultant and firm consultant. As per your choice, you can get empaneled free of cost. No need to pay any money. How many of you know, lastly, how many of you know GEM portal? Any idea? Government marketplace. Those who are aware, well enough. Those who are not aware, please do. And all of you must enroll yourself on GEM portal. Nowadays, so many tenders are coming up. Why this is important? Most of the CA firms, I correctly heard Pannaraji. He was saying that the institute runs from SME firms. And this is true. I correctly remember we have an order of Ministry of MSME which says that the PSUs have to acquire minimum purchases, 20% might be or 25% from MSME firms. So if I'm a PSU and my legal and professional charge in P&L is rupees 100, 20 rupees must be from SME firms. So much of work is there. Please go and enroll on GEM portal. Good thing is, Institute of Chartered Accountants and India Ethical Standards Board has also permitted enrollment on GEM portal, free of cost again. But again, you have to, I would suggest each one of you to download a book from Institute website. The name of the book is Professional Opportunities for Members and Appraisal, a 400-page book. I repeat the name, Professional Opportunities for Members and Appraisal. It's a publication of 2009. So leave the old things like those days was sales tax, nowadays GST, leave that thing. But still, all things are prevalent. So when you will see this book, you will get to know all this stuff. So with these words, again a very thank you to each one of the listeners and nice talking to you in an interactive manner. Thank you very much.
Thank you so much, sir, for such a wonderful session. You mentioned that in one of the earlier sessions, the audience told you that you scared. Here, I don't think so, we are scared, but you have alerted us. I would say that you have alerted everybody on what are the considerations. Definitely a very useful session, and thank you on behalf of Bengaluru Branch for accepting our invitation. Can I request our chairman to hand over a memento to us? So we'll have a tea break now for 15 minutes and we'll reassemble for the next session. Thank you. Which is on role of a CA in preparing a company to be IPO ready. Yeah, we have CA Vijay Raja for this. I request Pramod Hegde to escort him to the dais. Welcome to you, sir. I'm sure all of you know CA Vijay Raja, but still my duty to introduce him. He's a chartered accountant, cost accountant, who secured gold medal in chartered accountancy, secured third rank in cost accountancy, first rank in BCom, and many more, insolvency professional too. He's a practicing chartered accountant and also a member of Institute of Valuers, a corporate trainer and visiting faculty for over 30 years. Past member of Central Taxes Committee of FKCCI and presented various papers on income tax, corporate law and other laws across India. He is an author of Corporate and Other Laws, popular publication in CA profession, author of Corporate and Economic Laws, another publication in CA profession, was a visiting faculty at ICI, CFA, ICMA, MBA and such other institutions. He has coached more than 55,000 chartered accountancy students. So it's a privilege to have you here and thank you for accepting our invitation and being here. So over to you.
Namaste to all my friends. Thanks to
Pramod, actually, I think it's in all these years, I've been on stage for the last 30 years. I think for the first time that somebody actually called me up, in all these 30 years, okay, first time somebody called me up and told me, ಯಾವ topic ಬೇಕಾದ್ರೂ ಮಾತಾಡ್ಕೊಳ್ಳಿ ಪರವಾಗಿಲ್ಲ. So he didn't give me the topic. Yeah, he said, I don't mind what topic you want to talk, simply come. ಬಂದ್ರೆ ಸಾಕು. So first time somebody gave me an invitation like this, whatever topic you want to talk, but please come. I was so impressed with that invitation. I said okay. So, but finally, after he said, after I told him okay, then from the office they called him and said, what topic? I thought I can tell whatever I want. So thanks a lot. I think that was a fabulous way. So I thought I'll take up this topic of IPO. Now, why we have to take up on this IPO is, see, I'm not discussing about actual IPO activity because the adda for IPO is always Mumbai, right? Mumbai is the adda for IPO. So I'm not discussing IPO. Then what am I discussing? I'm talking about getting a company ready for a IPO. That would be all our jobs, right? So last stage we will not do. That is because ultimately it goes to Mumbai only for that. But what we can do starts at least 18 months to 24 months in advance. So I am talking about those 18 months to 24 months in advance as to what we should do from our role and what we can make a difference to a company. So let's talk about this process as to what all we should do for keeping a company ready for a IPO. We have seen at least in 2023 recently the number of reverse flips that are happening. I don't know if you know what is this reverse flip that was happening. All these days it used to so happen, subsidiary company will be in India, holding company will be in US or Europe or UK somewhere or Hong Kong, and they'll do the listing there. In 2023, the trend has changed. Now the trend is, they want to flip everything and ensure that the actual company is in India and we do the listing here. Which means the importance for listing in Indian market is slowly gaining more importance than how it was before. Which means by 24, 25, 26, actual Amrutkal is starting for us. Wherein all of them want to get into this role of let's try and become an IPO. So what we are trying to understand is, if a client asks us, I have the dream, I should also become an IPO. We should not tell that nanu gottilla. At least we should be able to say that, okay, I can tell you what you should do, what all you need to do. I'll take you through the process, and if you can reach that, then yes, I think you're ready for a IPO. Let's talk about what all we should look at. Now, before I start, first my gratitude to ICI Bangalore for inviting me here. I feel gratitude is the best attitude. It will always take us to higher altitude. We'll get very close to the ceiling, right? So thanks to ICI, and of course thanks to my office Guru and Jana, because they allowed me to bunk today. So to be here in the session. This is something which I always like. The more we learn, the more we realize how little we know. I think it's so true, right? We feel I know so many things. The moment I take up something new and start looking at it, then I realize I actually don't know so much. Right? I think even when Kamal was speaking, we start realizing, oh, idana madbekagidda. Oh, essay 240 gottu. Oh, para 26 vere odbeka right? Seri along with para 26 47 vere odbeka. But we always thought, I am not first, because in auditing what we were taught. First we thought nai, and nai. They told we are not a bloodhound. We are a watchdog. ಅರ್ಥ ಹೇಳಿದ್ದು ಫಸ್ಟ್ ನನಗೆ ಹಂಗೆ ಹೇಳ್ಕೊಡಿ ಫಸ್ಟ್ ಚಾಪ್ಟರ್ ಅಲ್ಲಿ. ಅದಕ್ಕೆ ಎಲ್ಲರಿಗೂ ಮಾತಾಡೋದಿಲ್ಲ ಸಿ ಎ ಹೆಂಗಮ್ಮ ಇದೆ ಸಿ ಎ ಪ್ರಾಕ್ಟೀಸ್ ನಾಯಿ ಪಾಡಮ್ಮ ಅನ್ನೋ ಕರೆಕ್ಟ್ ಫಸ್ಟ್. So it starts like that. So we always thought, okay, we are not a bloodhound and all that. But now if you see, we are telling no, you have to start with the presumption that there is some fraud. That means we are no more in the first aspect of audit. I think it's all slowly changed into something else today. So this is what we understand, that the more we realize how little we know, I think the more we keep saying. Now also as we keep saying, I think we get to know, okay, I think we don't know a lot. So let's see what we can understand in this. Now first thing I wanted to start with a conservative approach of telling not all IPOs are a success story. So we have heard of a lot of IPOs coming up, but we still don't know how many actually did not make it. So So there's a big list of companies which never made it to IPO. Now why didn't they make it to IPO is what we're trying to solve the problem here now. If we all can play a role of understanding a few things here, I'm sure many of the companies can get into the IPO mode also. So what are the issues? I've just taken a few issues for us to discuss. India's was the last regulator to reject SoftBank's back OYO IPO filing. Now if you are aware, OYO actually first gave its DRHP 2021 it started, saying that we'll go for an IPO, we'll go for an IPO. But then ultimately what happened is it got stuck. Even now it's not. They're saying that the latest news 6 days back is that they said, I think I'll back out from IPO. I'm not to IPO at all, instead I'll take some private investors, if that will try to work. And maybe later we'll think about going for an IPO. And who was there, who stopped them from this? Competitors. Competitors itself can create a roadblock. So that means, in the company, it's not just the company, there are competitors also saying that somehow I'll ensure that I'll create a coquette, right? So wherein they cannot operate at all. Look at this. OYO was asked to update additional sections in its DRHP, such as updating the risk factors, KPIs, outstanding litigations, basis for valuation. So they asked a big list and said all these things are not okay, so I'll not allow you to go for an IPO. So SEBI said I'll not allow you, and therefore they got stopped. Many of the IPOs now they're stopping because SEBI started to understand that there's an issue with Paytm, latest case, the hotcake issue which is happening on Paytm. Zomato had an issue which, because you know how it fell, right? Nykaa had an issue. So all IPOs is not a dream. Matlab, it's not that oh IPO ho gaya and then it's going up, but they've also gone down. So therefore the regulators have become more sharper now. This entity that is Go Digit clears another hurdle on road to IPO. What I'm trying to tell you in all these cases is, there are many issues wherein they stopped. And if you see, I've written a few points here, like simple non-disclosures like change in conversion ratio for preferred shareholders. SEBI cancelled it, saying that you're not telling me. I don't know if you've seen many of our CCPS agreements. In some of the CCPS agreements, we have written there saying the conversion will be decided at a later point of time based on some liquidity event. Ultimately, nobody knows what we're telling you. We'll put some dialogue. Now that became an issue with SEBI saying that I should know what should be the diluted stakes. I know what is your equity shares total, but diluted equity shares I still don't know, because you're not telling what will be the conversion ratio. Because we know in convertible preference shares, I can either give the conversion ratio today, or I tell him I'll tell you later, depending upon the growth of my company. So SEBI has told you can't give me such question marks wherein I don't know what is your dilutive equity. So they said I'll reject your IPO. There are many such cases like this. If you see pending litigations against a company can also be a cause for rejection. NSE is IPO. NSE is a place where we list all the companies. NSE only could not list its own company. Right? NSE itself could not list its own company. I don't know if you're aware of this. BSE got listed. If you're aware, you can buy the shares of BSE, right? So you can't buy the shares of BSE in BSE exchange. Adu selfie. You can only do it in NSE and so on. As far as NSE was concerned, NSE itself wanted to go for an IPO, it stopped. Because this is not okay, that is not okay, this information is not okay, that itself got stopped. This issues like mismatching can cause refiling registries. Even capital structure with major debt can cause rejection. If you have seen some of the issues that has come out, one of the reasons they give for raising funds is because they want to repay debts. If you have been seeing, right? They want to repay the debt itself is a reason. Now slowly SEBI is telling that cannot be the only reason why you want to raise capital. That can be one of the reasons. We are not telling no, but that can't be the only reason. So, Mamaearth recent issue which happened, they also said that there will be a little portion of debt which will be repaid. So that's okay. But that can't be the sole reason for creating an IPO. So this is benefits of listing. Then why should we go for a listing? Why every company is aspiring for listing? What can be the benefits? Number one, raising capital. We want to raise capital. Currency for mergers and what is this currency for mergers and acquisitions? The moment my company goes into an IPO, I am listed. Tomorrow my share itself is equal to money. So tomorrow I don't have to tell people, hey, kaas kortini and buy your company. Not required. When company shares kortini, give me your company. So that means my alternate currency is my company's shares because it's as good as liquid cash now because you know it has a value in the stock market. Then of course you leverage. This is something which is happening. Those who invest in shares and stocks also know about this point about leveraging. Wherein as a promoter, because suddenly the value of his shareholding goes up because it's already listed in the stock exchange. Now let us say it's now worth 100 crores. He can pledge this 100 crores worth of shares and get 3x of money. I think you're aware, some of you must be dealing with margin monies. You know in the stock market how it works. So that means you're leveraging this entire concept. 100 suddenly becomes 300. So you know you have 300 for you to again do something more, some more acquisitions, some more business expansions and so on. Similarly, we are talking about talent acquisition. Obviously, everybody loves to work in a listed entity because automatically the brand image is going up. That's your next point. And of course, there's a higher valuation for these companies. That's the great advantage. What can a CA do? I think this is what is important for us. Let's understand from our point of view what we should do as far as keeping a company ready is concerned. Let's look at that. First, listing is a lengthy and time-consuming process. We know that. It doesn't happen like this. We need minimum of 6 months. I'm telling 6 months from the time company is ready. From the time it is ready, it takes 6 months. And I am telling that our role is 18 months before that 6 months. So if some company tells me, saying that I want to do listing in 1st April, you're telling only April Fool is possible. On 1st April, this 1st April not possible. Let us plan for at least 1.5 to 2 years later. So don't think right away I'll be waiting for listing. It's not going to happen. Experts who understand the requirements, process flow, knowledge of regulators and finance. If you see, when you talk about experts, knowledge, all this comes through a CA. I think a CA is the best fit to help a company in getting it ready for an IPO. But before that, let's look at some IPO statistics. What is the statistics? Among the stock exchanges, what is India's global positioning? Among all the stock exchanges in the world, hundreds of stock exchanges in the world, where are we? Our stock exchange, number 4. Number 6. Fantastic. So 4, 5, 3, that's a number which is fluctuating. So you can take a guess. So if you're seeing this is of course from the statistica.com, where in December 23, I'm not talking the latest. Right? We were here. If you see, United States was number 1, Europe was 2nd, Japan was 3rd, 4th was third was China, 4th was Japan, and 5th was India. But this is again not static. It keeps changing. Suddenly from 5 will come to 4, from sometime 4 to 5 again because of the parameters changes. It keeps changing. But we are very close. Where in the top 4, 5, I think is a great place to be in, and that's why all companies are now flipping, saying that I think IPOs in India is better than going IPO outside. 2024 latest report, USA expected to get into recession. I don't know how many of you saw that recent news of IMF. They're telling probability of USA going into recession is increased by 10%. I never knew this kind of statistics someone will come. Right? So probability is increased for it to go into recession types. Europe already in recession. UK does not know what is happening with Brexit and things like that happening. This side, Russia, Ukraine happening. So the only place you find which they feel is the promise for the future is India. That's why we find in 2023 end, they started to go with a lot of these IPOs here. IPOs, if you see, even in the SME market, I think we have got 2 markets now. One is the SME stock market and the other one is the main board, right? Between the two also, fantastic growth. If you see month on month, every month you can see SME IPOs, number of companies that is getting listed in SME IPOs, and then of course the amount of investments that's happening. We are talking about 3,500 crore market. Year-on-year growth we are talking about. I think that's phenomenal growth for India. So is there really a scope for a CA? Let's understand this from our point of view. Now let's see where is our pie, right? What do we get out of this? A CA can contribute to a big slice of this pie with his expertise. We identified this through a 7-step process. See, IPO is a 7-step process. I'll tell you at the end, last, and if I tell you 7 steps, that means my session is over. Yeah, because I told you we're not interested in IPO, we're interested in pre-IPO, as to what we should do before the company is ready for an IPO. Then, even prior to initiating step 1, the CS role will kick in. That's what I'm discussing here. So this is the step where the foundation is laid. Let us explore these possibilities. Let's start with one by one.
1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1. 1 Until then. Yeah. You can hear me? Yeah. But I can't hear myself. But you can hear me, right? Yes. Okay, fine, great. So if you see, look at this. I've given you 6 points where we should focus on for all the companies. Right? We call this as pre-IPO, and that's why I call this as step 0. Because step 1 is the IPO process. Right? From there, 7 steps are there. But I'm calling this as step 0. Orchestra, all of you heard of the orchestra? Ready? So if you've seen an orchestra, this is nice. I can hear myself. Yeah. So if you've seen an orchestra, how it works, there is drums, one place, there is a violin and flute, the other side, there's a guitar, one more person there, and one more with the jinx, one more person with those small drums, and all of them together only is what you call it as an orchestra. Wherein there is a coordination between all of them. That's exactly what happens for IPO process. There has to be a coordination with lot of activities. I have listed into 6 buckets. If you see these 6 buckets, first one is called eligibility check, whether you are eligible or not for an IPO. Due diligence, data room creation, internal reconstructions, valuations, models. So I'll put all of them into these 6 buckets and take one by one. These 6 things is what, if we can take care for a company, that means they are ready for a IPO. So let's understand all these 6 aspects one by one. See, full if I will take, then like what Kamal was telling, you should have called me yesterday. So I will tell you should have called me last year. So that's a long process. But here what we are trying to understand is 18 months. 18 months, correct. You should have called me 18 months ago. Correct? So let's understand what are the things. I'm just putting it into one bucket. It's like a trailer. Ishte saku. Because समझदार को इशारा काफी है. No, I'm talking about us. Some of the we are only, right? So good for us, right? So little hint if you give, I think we are able to catch it from there. From there we know what we are supposed to do. So it's not that we are new into this profession. Little you tell us, I think we know what we should do from there. So let me give you the trailer. I'm sure from there you can help the companies grow from there. IPO eligibility. Eligibilities are different between the main board, which is our actual stock market, and the SME board. So the differences are there between the two. In the main board also, SEBI has given some IPO eligibility criteria, and then you have got NSE having its own criteria, BSE having its own criteria. That is why you'll find some of the companies, they are listed in NSE but not in BSE or vice versa. They are in BSE but not in NSE. There are some entities like this. But most of the entities are there in both NSE as well as BSE, they are there. But there are criteria, I just want to tell you that there are different criteria. Now I'll tell you why I'm telling this. Sometimes if you do a Google, you know Google search. If you do that Google search, no, different tabs will give you different eligibility criteria. So you're wondering, this fellow told like this. Next to the tab is telling something else. Now you're wondering why different is giving different one is because of this reason. See, some will give you NSE IPO eligibilities. Some would have given you BSE. Some would have given you about SME categories. And therefore you need to understand which one are you trying to check. Accordingly you get the eligibility criteria. Then SMEs also have their own criteria. There's a BSE as well as NSE criteria are there. Some of them are at the criteria, it will be better. Here is the criteria. Some of them, not all of them, because that's again a big list. And SEBI you have the SEBI ICDR, SEBI LODR, regulations are there which gives a big list. But here are the main ones. What are they? Number one, company should be in existence in at least last 3 years. Under an article Shiptara. Oh sorry, new syllabus, old syllabus, right? 3 years of articleship. So 3 years of existence is required. Minimum of 10 CR, paid up capital must be there. So this is the first thing we need to ensure. They have to ensure they must have a capital of at least 10 CR. If they don't have a paid up capital of 10 CR, then there's no point about it. So they have to ensure that at least they reach. Then no defaults in loans or any other kind. I think this is quite obvious. You should not have any defaults in loan repayments. CRISIL rating has to be taken care of. then not more than 50% of assets are in monetary assets. Minimum market capitalization should be at least 25 CR. I'll explain in detail about what I'm talking about, but for the time being, just understand there's some criteria. And of course, you must have a PBT of at least 15 CR. This is your average operating profits. Operating profit in our language is a profit before taxes, and it's your EBIT, right? What we use normally as the EBITs. Our EBIT should be at least 15 CR. So, starting point is like this. If you want a company to get into listing, capital increasing should not be a difficulty. But it's not authorized capital. We're talking about a paid up capital. So, we're talking about a paid up capital of at least 10 CR. Profitability is what is most important for us to check here. So, if they don't have a profitability of at least 15 CR, then we can tell them you're still not ready for a main board IPO. But they can always go for an SME. If they're not able to satisfy any of these conditions, they can go for SME. SME says, in last 3 years, 2 years only, profit is there. That's all they're telling. They're not even telling how much will be the profit. They're saying, as long as you're plus compared to the minus, I'm okay, I'll give you SME. So SME listing is very easy. So I'll not get into the SME listing part because that's too easy. I'll get into the main board listing. I think that's more important for us. Due diligence is something which is very important for every company. Now, doing a due diligence is what we should take care of. Now, when we do a DD, in fact, recently when I was talking to one of the clients, we were telling him saying that, see, you need to do an FDD, you have to do an LDD, then you have to take care of an SDD, and we do a CDD. So, DD, so many DDs are there, what are these so many DDs you're talking about? So, I told you, one is called a financial, ultimately check right? We need to check everything whether they are compliant or not compliant. We give fancy names for each one of them because of the area of focus. First one is what? Financial due diligence. So we're looking into what we are experts, what we normally do as our internal audit requirements, etc. Checking the financial due diligences, whether disclosures are correct, whether the categorization is correct, provisions are correct. All that is what we're talking about an FDD part. A commercial DD is what we comprehensively include. See, we need to understand whether this company is valuable. So what I mean by valuable is, do people look at this company as it has some worth, and in future, like for example, very simple example to give you is what they are the pipeline ordering capability. What do I mean by that? There were so many orders, but how many more orders are there in the pipeline? So if I pump in a little more funds into the company, can this numbers go faster? Or is it that it always takes that much time, whether I pump in more money, I don't pump in the money, then it's not going to make any difference to me. So that's one of the aspects how we look at it. Tax DD, we are experts on that. Legal due diligences, operational due diligences to do with the operational efficiency, because I link this with my operational profits. I gave you in the previous slide about operating profits. And secretarial due diligence, this has to be done from inception. Very important for all of us. If there's a company which is some 10 years old, 15 years old, and they tell I want to go for IPO in future, be ready. From last 15 years, you have to start doing due diligence. That means from the time of incorporation, you have to do a due diligence to check whether all the secretarial data has been correctly done. Especially for SEBI, they focus on the cap table. So what do you mean by cap table? In the capital table, to see how many times you have done a private placement, whether all the aspects of private placement has been correctly done or not, or if there has been a rights issue, whether the formalities for rights issue has been correctly done or not. If there is a bonus issue, I think you are understanding what I mean by cap table. So the cap table issues are all these things which are all related to the cap table. So whether all those compliances have been correctly done or not, very, very important for them. So therefore you need to check the entire aspect from the beginning. This is a big job. These due diligences actually is a very big job for most of the companies. What we have seen in practice is those companies they said, hey, I'll go for an IPO. They had the capital is there, profits is there, pipeline is there, ella sakala is there, but history chanagilla. So history has become the big mystery. So what is the history? That is from inception, the number of violations they have had. See, when they are small, nobody cares for compliance. We all know it. What you are talking about compliance, the compliant first let us do some business, is what they used to do. This became a problem. So all those non-compliances will hit them at the time of IPO. Why? Because in DRHP is a draft red herring prospectus. There you have to give disclosures about full history. Jatka ella hakodbekal. Right from beginning, Rao Kala yavagittu for this company. Basically trying to say when you were not in good times, and then what did you do? Did you go for compounding for all those offences? See, normally ಏನು ಮಾಡ್ತೀವಿ, late filing fee we will pay. Late filing fee paid does not mean it's closed. I hope you understand this. Late filing fee is only to ensure still filed. It does not mean I'm cured of the errors done. So for all the penalties or the fines, either I should go for adjudication or I should go for compounding. One of those two I should have done. I think we are aware about what I'm talking about, right? So this is where we do a due diligence. So we do a lot of work. In fact, many companies, when they ask us how much time you need for doing due diligence, I say that if you are already an investor-driven company, you have a lot of compliances, I need at least 3 weeks. If you don't have anything, then at least more than a month. So that's the time, and I tell them saying that I'll put in at least 5 chartered accountants into this on a full-time basis to ensure we do a due diligence, because that much time is required for doing all this activity to extract all the records. Illi stop agalla. In due diligence enagutte, we'll find out the errors. We'll say there's a non-compliance. And it doesn't stop there, right? After that, I should also give them a solution, saying that for all these cases we'll go for adjudication, and for all these cases we'll go for compounding, right? And then we have to ensure that is also done, and then it is closed. Then they're ready for a IPO after that. That means you are cleaning up and then do it. So are we telling if you are defaulted, you can never go for IPO? We're not saying that. We're telling no problem, but you should have cured it. That's what is important here. Then there is a data room creation. If you see those 6 aspects what I gave you, one of them was data room creation. So what's this data room creation? I'm giving you one of those slides how we do for some of our clients. What we do is we'll tell them they are only in the form of a dashboard, wherein we say this compliance every month you have done or not, this compliance every quarterly you have done or not, this compliance every year you have done or not. We give them the entire compliance list and create a data room. Now data room creation we need to understand is from the point of view of SEBI. How do I understand what SEBI wants? Easy. Go to everything, go to ICDR and LODR. ICDR is your SEBI ICDR and SEBI LODR we are aware, isn't it, right? So just go into SEBI ICDR and SEBI, 3 things if you read, no? Most of this data you will get. Hey, go to the some of them, jargons use that is see, we belong to Bangalore. Bangalore, that's how it is. You have to talk with all jargons only. If you go to software companies, next level jargons are there. What words they are telling, right? So we are also learning those jargons. Now we will also create our own jargons. Now we start our IT now IT our IT information technology. Now it's income tax. Right. So we create all this. From your point of view, if you want to read all these things, from where should you read this? One is called ICDR regulations. So SEBI ICDR. What is ICDR full form? ICDR, issue of capital and disclosure. Right, issuing capital, disclosure. LODR, listing obligations. So I think both of them very obvious, right? And disclosure requirements. If you read SEBI ICDR and SEBI LODR, and then there is one more in SEBI that is about DRHP, that is draft red herring prospectus. It's not with rare. Whatever I am giving you here will be available there. Now don't get up. ಅದೆಲ್ಲ ಓದಬೇಕು ಅಂದರೆ 500 pages. Made it into a trailer and made it small so that we understand in simple words how to look into all of them. So I just made it smaller. So that means I have to read 500 pages because my entire ready model, right? So create this data room. If you see here the second bullet, you will understand. Aligning the data room to filings required for listing. See, the point is, now create model ಮಾಡ್ಬಿಡ್ತೀವಿ. Data room ಅಂದ್ರೆ ಏನು ಮಾಡ್ತೀವಿ ನಾವು? ಒಂದು all the documents ಏನೇನಿದೆಯೋ ಒಂದು ಕಡೆ ಡಂಪ್ ಮಾಡಿ ಇಟ್ಟಿರ್ತೀವಿ. Dump is not enough. ಅದನ್ನ indexation ಕರೆಕ್ಟ್ ಆಗಿ ಹಾಕಿರಬೇಕು. ಆ indexation ಹಿಂಗೆ the way it is required for SEBI requirement ಪ್ರಕಾರ ರೆಡಿ ಮಾಡಬೇಕು ಅದನ್ನ. Why is it important ಅಂದ್ರೆ at the time of IPO SEBI will suddenly say I want this document now ಅಂತಾರೆ. They will not tell, give you time, that issues are not there. So they say I want it now. So So that means I will be ready to pull out the data what they are asking in the next second. It's like search button. Data room will search immediately, and then I should be able to give them the information. So this is a big job, very big job. We charge a few lakhs of rupees only for data room creations. So that's the amount of work that is involved in creating data room. Each one is a specialization job. DD is a specialization job. Data room creation is a specialization job. So in office we have separate teams for this. The teams only are called like that. This is due diligence team. This is data room creation team. And that's how we call it also. Because that much work is involved for doing all this. And I can't put juniors here. They have to be experienced chartered accountants only, because juniors will never understand what is the requirements here. Now comes the most important part. That is fourth one. Internal reconstruction. ಇದರಲ್ಲಿ ಒಂದಷ್ಟೊಂದು ಐಟಮ್ಸ್ ಇದೆ. All that I put it under internal reconstruction. ಏನೆಲ್ಲ ಇದೆ? One by one I will start. First one. Top rated directors on BOD and top level executives. Now the first aspect that is required is we have to tell the board, till now you are like a family concern. See, most of these entities, what happens is it's all known people, either friends or relatives, cousins. Somehow it is more or less closely held. We should tell them that you cannot operate like this anymore. Illivargu nanishta. What decisions I want to take, I took my decisions. It cannot work once you become a listed entities. So now itself they have to start the practice. Adike em madbeku, they should have those CFOs and CSs into their office. In fact, you must be knowing this, right? We do a lot of these CFO works, right? Many of us, I'm sure, many of the CAs here also will be doing these virtual CFO jobs. That is the starting point. Wherein if you can't hire somebody right now inside your organization, at least have a virtual CFO, so that we'll at least tell you how it works like a CFO. The CFO means very costly, I can't take them on that. So we tell them you can hire us only as a virtual CFO. At least we'll give you a little bit of an idea what are the demands of a CFO and how you are supposed to work and so on, and streamlining the process. Strengthening the finance and compliance functions, enhance corporate governance, recruiting qualified non-executive members in the board. Between EDs, executive directors, and NEDs, non-executive directors. The number of NEDs should start increasing. That is the non-executive directors. Private company, we have never heard of NRC. NRC? Nomination and Remuneration Committee. Right? It's called as an NRC, Nomination and Remuneration Committee. Where is the need for a remuneration committee and all? Because first of all, 197, 190 they will apply agala. To talk about the maximum remuneration, there's nothing like that, right? I can decide how much I want to take and so on. All this will kick in once you become listed. So the promoter should be trained right now, telling that you can't simply decide in the last minute how you want. So let us create policies now itself as to how you should be operating in future. It's a shock. I know many companies have gone through a shock. Telling that suddenly when they go for an IPO, they say, what is this? This I can't decide, that I can't decide. So everything should now become more professionally driven. Look at the next one. This is what many of these companies have done. I've given you live situations what many companies did. You can see here, Pharmacy. What did Pharmacy do? Former MD and CEO of HDFC Bank, Aditya Puri, joined the board of API Holdings, the parent company of IPO-bound medicine delivery platform Pharmacy. Look at this. For a Pharmacy company, they onboarded Aditya Puri, who was the MD and CEO of HDFC. Look at that. Why? So is he going to be an executive director? No, he will be a non-executive director. But why did they take him much before they went in for an IPO? Why? Because he will bring in ideas telling that, hey, this is how a professional entity will work. So in all the board meetings, he'll start telling you, oh, this is what we do in HDFC. Now, is HDFC linked with pharmaceutical company? No. But at least the processes and corporate governance will remain the same. Look at this entity here. MQR Pharma. Former Sanofi MD. Dr. Shailesh Iyengar joined the board of Bain Capital, which is backed by MQR Capital. Now, what happened here also was, they said, let us bring on to the board some of these experts who can keep advising me in board meetings, telling that, hey, this is not how you will run in future. Right? What will happen because of this? Imagine now for this company, when they go to SEBI and tell, I want an IPO, and you tell them that I have these people from the last 18 months. Then the image what SEBI gets about your company is already very clear that you are serious about professionalism in your company. right? That is why you start onboarding. And that's just examples for AAP. Independent director is a non-executive director. Now he is very important, and you know section 149 which says you must have at least 1/3 as independent directors. In fact, I'm sure many of you also will be knowing in your own companies that you will be having independent directors, or some of you may be asked to become independent director for some of the companies. Chartered accountants become independent directors in many places, right? We have been independent directors in many corporates, wherein because once you're an independent director, you don't do any work for the company other than being a independent director, because conflict of interest should never be there, right? So you can take up the role of an independent director also. So there are many of them who act as independent directors. So we advise the company, get in some outsiders. Get in an outsider so that they tell you as to unbiased, like an umpire, cricket match umpire. But you have a cricket match umpire ke value nahi la. Because he is a third umpire. Yeah, he will tell you please refer to third umpire. Our ಏನು ಮಾಡಲ್ಲ. A run out also, the batsman is there. Wickets are somewhere there. ಆದರೂ he will ask, ಯಾಕೋ risk ಬೇಡ ಅಂತ. Yeah, he will ask for. Before and all, how it used to be when there was no third umpire full, they used to focus and concentrate. You are concentrate. So anyway, you need an independent director who is basically the third umpire. So that's a better one, right? Who will help you to understand how your company is functioning. So create third umpires in the companies from now on itself. These are important. If you tell the company start having independent directors, they start realizing. ಇದೆಲ್ಲ ಬೇಕಾ ನಮಗೆ. Some companies, no, seriously. Some companies they told us, please take up this assignment. 18 months, please train us. So 18 months job. It's all 18 months assignments we take. So we started the process. After 12 months, they said thanks. Thanks for what? Andre IPO ne beda. Inge chanagidivi. I'm happy to exist. IPO ne beda hogi sir. It all depends. It's all about how you are ready for it or you're not ready for. Some of them don't want to give their control. I say I'm happy with keeping the control. I don't want that extra growth. It's okay. That is their choice. This is something which some of the entities also did this. Wherein spin off the vertical or business arm which was chosen. If you have 2-3 group entities and you feel there is an issue with one entity, and because of the issue which you have with one entity, this entity will suffer when it comes to IPO. Then what you do is you will segregate the two. If you see, actually I've given you an example of what actually happened. If you see here, Emcure did this. Right? In 2019 itself, Emcure Pharma, which is a Pune-based drug maker, the company ring-fenced its domestic business as it was facing some regulatory issues in US market. Because of that US market issues which it had, it said, okay, I will demerge the company before IPO itself. And look at this, when it did this, it is done a few years in advance. See this, they did it in 2019 and they're coming out with an IPO in 2024. Look at the planning. They've done this plan 5 years back. Right, 4 to 5 years back itself, they already decided saying that okay, I'll be ready from you, because 3 years, when you see at least last 3 years records, they should have that clean records, right? They should not have those links, and therefore they said I'll do it much in advance. So this is one of the things they did, and in 2024 this year they're coming out with a IPO. I'm not discussing any insider trading here. Saying the IPO ne bandila, how did you know? Ella public domain. All Gulu has it, right? Google has all these things, so therefore. These are all available informations. Business strategies, of course, you have to look at the entire business strategies of the company. If you see here, what is your unique selling point? Very important to have a story for your company. What's your story? Every company must have a story. Very important. In what is their storyline? And that storyline should be impressive for investors. I think you know this, like Shark Tanks. If you see this, everybody comes up with some storyline, and that's very important. Otherwise, nobody is interested in investing in your company today. So then you must have a USP, a unique selling point. What is so special about your company, and what's your story that you have for them? So if you see here, yeah, Mamaearth was a classic example. Last year it went into IPO. If you are aware, 330 was the listing price, and now it is 430, 100 plus. So it's grown by nearly a huge bounce, right? From 330, that means you're talking about 30% plus growth. And you should see their story. This is always taken as a classic example because it's a new one. Look at their story. They said, we are Asia's first made safe certified brand. made safe, Mama, everything 100% toxic free and natural, just as you want for yourself and for your baby. So they said you can trust on us with our products that it is safe even for your newborn babies also. Now automatically they ensured that they created a market for themselves, and they said now with all these maternity, right, post-maternity and then cares that has come into picture, they said all these entities now, hospitals, they also start subscribing, saying that okay, because initially first few days the baby is in the hospital, right? And therefore the entire products has to be used by the hospital industry, right? They are the ones who have to start using it because they have to take care of the child there, correct? So what do they use? So they said, okay, we'll create a brand for itself. They created a story. From here they started. Then they came out with some more aspects. That's how they created one big story. Very popular it is in investor circles. Mama has become a very popular story. So if you go through their stories, the way they tell their stories, they create that attachment towards an emotional connect, responsibilities and so on. IFCs, I don't have to tell you. So you know what ensuring that IFC assessments are done. So you have to take care of all the IFC, internal financial controls. This is again interesting. The salaries what you are paying to your executives. Because you know for a listed company you also give a disclosure about what are the salaries you give all those top levels. Now that you have to start deciding from itself as to what will be the salary levels you are giving them. 197, it's not there for a private company, but it becomes applicable for a listed entity, and therefore you should be aware of those limits based on the net profits, how much can be given, to whom it can be given and so on. This is time pass. If you want to go for listing from a private company, first you have to convert into public company is obvious point. So straight away private company they open to. If you go for listing, not possible, so this is very obvious. So I will not spend time on this. So you have to go into conversion of a private company into a public company, right? So I always tell this saying that for private to public, I don't know, in Tamil if you have seen, there's those Rajinikanth movies, he'll start when he has to fight, the villains will say die, he'll come full, that's a standard dialogue, say die, die, they'll say. So I used to always say die, D-A-I, die. So there's a private company becoming public also is like that only. Full Josh will come die and D-A-I, and D-I, and the D is to you have to delete. You have to delete your word private from your name. A is alteration of articles of association. You have to alter your articles of association, remove that RLP, restricts, limits and prohibits, which are there as your clauses. And I, right, is to intimate the ROC, telling that I am ready for conversion to so and so. It's a full die and will come. So that is for conversion. Website, very important. How your website is for a company. Many of them have not cared over the website. So please tell all these companies saying that your website is very important. Website is not just about what you show off there about your company and the product. It's also about disclosures that a website should have. I'm sure all of you will doing this annual filings. We mentioned there whether we have a website and whether our AOC and all that is there in the, I don't know, website right? Website only is not working. So very important, this will become a very important issue tomorrow. Please be careful. So we may not have full knowledge about it. That's why I'm written there. Although CA cannot advise on the interface, we are not technical experts on how a website page should work and what should click and what should not. That's why they take care. But at least we should be ready with inputs for compliance requirements that a website should have. This is Infosys website, wherein they give all this information. So what we should advise a company is this part. Here, I'll give you some of the website disclosures that should be there. So please tell your clients that this is what they should take care. What all? There should be a code for prohibition, not for your private company. I'm telling you, once you're going to become public, they should be ready for all this. What is that? Code for prohibition of insider trading. They should be there in the website. Independent director appointment, his terms and conditions. Because I should also know that if I want to become an independent director in your company, what are your terms and conditions? Because then it shows that you are appointing on an unbiased manner, as not that you have appointed your friend as independent director. Right? So therefore all that should be there. What is your code of conduct? Policies for RPT, very popular anyway in audits, related party transactions. So you have to take care of all the related party transactions. Grievance redressals, because especially once you become a public company, then there will be a lot of queries from shareholders. Then for the grievances, whether you have a separate grievance redressal mechanism. Then of course all the financial information, so all the balance sheets for the last few years, filings, how we are doing the filings, that detail should be there. Drafting policies. There are so many policies we are supposed to have. Every company is supposed to have a list of policies. There are more than 13 standard policies which is required for a listed entity, if you are aware. I'll just give you a quick analysis of what are those 13 policies which every company must have. One is on RPT, as to how you decide about the materiality concept of related party transactions. Then your NRC, I've already told you about nomination and remuneration committee. Then about code of conduct and ethics, as well as senior management. Whistleblower policy. Every company must have a whistleblower policy. Then POSH. POSH we know about for sexual harassment, prevention of sexual harassment, what is it that you have? CSR policies, these are all very obvious ones which we all know. Then preservation of documents, how are you preserving your documents, where are you preserving your documents, equally important. Then for disclosing on the events and informations about policies for stock exchange, then your UPSI, that is your unpublished, price sensitive informations. And finally we are talking about the insider trading reporting and preventing insider trading. Everything must be in the form of a policy. Yes.
So now this BRSR is applicable for foreign listed companies.
No, sorry.
Now BRSR is applicable for foreign listed companies.
Correct.
So is this replaced by this CSR policy?
No, what happens is CSR policy is still called a CSR policy only. Right? Although you have the BRFR still there, it is there, but still we still have the CSR policy still there. Very much there, because you still have to talk about 135 yet.
Yeah. So whether that implication is there that BRSR?
No, that will be still taken as two separate activities, but it is there. And you have to take
important now.
Now it has become very important.
ESG.
Correct. Now ESG also. That is like how somebody told us 1500 years in the EDV. Right. Right. Then come to this aspect here. Identifying KPIs. Very important. What are the key performance indicators of your company? Very, very important. Hey, if you can ask this question to some of your clients, ask him what is your KPI. Most of them will not know. They'll be able to tell you 1 point, 2 points, they still don't know what is that KPI. So therefore, recording these KPIs itself is a job. I'll give you some examples so that you also understand, because they'll ask us only in return. If you tell a client, what is your KPI? He'll ask, what is KPI? For examples, Cody, he will ask. So we should be prepared, right, to tell him what is the KPI and so on. So we're telling you have to choose the KPIs which are directly related to your business vision, mission and goal. So whatever key performance indicators we have should have a match with our goal. No, I still not told you what is KPI. I'm only telling that they should have a link, right? And you should tell me what's the stage of cycle of your company you are in, starting startup entity, or is it mid stage or the next stage. Then you have to talk about what is the metrics you have used. What is KPI? Okay, straight away let me go to KPI. Here there. Some of the retail KPIs which has been disclosed in most of the prospectus as these. If you see some of them, their KPIs can be what is their sale per square foot in the retail market especially. That is why if you see the way they have their stores, take a departmental store for example. Right? If you take examples like your India Mart, right? You take an example of these big bazaars, take an example of any of these departmental stores, you know that what is the sales they have per square foot, because every space is important for them, right? How they have aligned everything and how they place everything. Average transaction value, are people coming to my store and buying for 10 rupees, 20 rupees, or is it the average billing is around 2,000, 5,000 rupees? That is why you would have seen in some of these stores, marketing is done based on that. If you buy above 2,499, then you will get so much discount. How did they arrive with those numbers? 2,499 or 3,000 so or 4,999, all based on average transaction value. So they realized that people were having at this level. If I can somehow make them to spend till this level, my average also goes up, and that time I am giving them some incentive for it. Then your conversion rates, especially in many of these stores, you know, they walk in, walk out. It's called as window shopping. Especially in these malls. Malls, you went into a mall only for two reasons. On the picture, on the hotel. In between, round, right? All those shops full round. So therefore, they talk about what is the conversion rate, right? People are coming correct, footfall is happening, but how many are actually converting into customers can be a KPI. Then that's what we call it as foot traffic and digital traffic, as to how many people are actually coming in to your store. Some of them don't even walk into the store. Right? So that also is an issue. In fact, in one of the malls, my friend was saying that, hey, I'm not only, those two, looks like they love each other. So neatly the husband is holding the wife's hand and so cutely they are walking together. Immediately other fellow told, hey, Angalama, betray shopping mall. That is why he is holding her and going. Shopping over. Fine. Gross margin return on investments and finally inventory turnover ratios is what you have to do. This can be the KPIs for a retail sector. Any of you have heard of this proxy advisory firms? Yeah? Proxy can you Proxy college is famous. But what is this proxy advisory firms? Anybody? Very important for an IPO. How to vote on a particular matter. Super, perfect answer. So we're talking about, can you imagine this? All shareholders have a right to vote, correct? In all the resolutions. Whether I should vote in favor or whether I should vote against. For that there is a firm which will tell you what to do. They are called as proxy advisory firms. They will decide whether you should vote in favor or against. Look at that. These are specialized firms who specialize in telling you whether you should vote in favor or against. There are many companies where mergers did not happen because of proxy advisory firms. One company made an announcement, we are planning for this merger, so we want this resolution to be passed. Some proxy advisory firm gave a report telling that this merger is not good for the shareholders. All the shareholders went into it. Somebody asked, why, how do you know that? So look at the importance you are placing on somebody. Who is this fellow? He is nobody. Is he a part of the company? No. Yeah?
He is an interested party.
What he is selling is like the Hindenburg case. Isn't it? Right? So the share market fell. It's like that only. Somebody comes and tells whatever they want. But this has become very important today. Right? Proxy advisory firms. So what is your role in that case? If you know that tomorrow these guys are the influencers, before only go and give her a KPI. No, no. Is my KPI good? Is my profitability good? Is my story impressive? So do you think what I'm doing? No, no, they're not trying to cheat. So it's not that they're trying to blackmail you or anything. They're doing unbiased reporting. They have their own data matrix. So we'll tell them, okay, why don't we go in advance only to these proxy advisory firms and tell them, look, this is my company. I'll give you whatever data you want. Tell me whether my company is good or bad, whether the policies I'm making is good or bad. If he says it's not good, then we'll change it before we go for public. You understand what I'm talking about? If they say, I think you are good, then at least I know somebody has given me a tick mark saying that my plans are good, rather than going and then they coming out and telling, no, it's not a good idea at all. So therefore these are called as proxy. I'll give you some of the names of the popular proxy advisory firms in India. You can see here. One is called as IIAS. It's called as Institutional Investor Advisory Services. Another one which is very popular in India is InGovern, and one more is called SES, that is Stakeholder Empowerment Services. These are the three most popular proxy advisory firms which we have in currently in all the stock markets, which are influencing many of the investors. All the big QIBs, institutional investors, take their advice. And QIBs and institutional investors have the highest amount of shares. And if they tell no, it's no. If they tell yes, and how are they telling yes or no based on proxy advisory firms? Because what they say, these people will say, okay, chalo, we'll go by what they are telling. Then come to point number 5, valuations. I think we all know about valuations. We know we give valuations for RV valuation reports. You have heard of RV valuation reports every time for a company when it goes for any primary market issues, correct? Yes. Private placements, you need RV report, correct? And you have merchant banker valuations. That's what we do full time in office. You have a chartered accountant's valuation report, RV reports, registered valuer, and MB reports. Right? For income tax also, I'm sure you would have done this for the sake of 56. So, what is so important here, I'll tell you. Any of you have done private company valuations, or at least seen the valuation reports of private companies? Some of them, yes, raise your hands please. Okay. I don't know the company name at all. Roughly, what is the value of the share in whichever valuations you have seen? Whichever companies you have seen. I have seen hundreds of it because we do that valuations day in, day out. But some number you tell me. 10,000 rupees per share.
Could be anything. Could be generally above 1,000.
1,000 rupees per share. Some valuations in your you have seen. 3,000 rupees per share. Now, that is how the valuations are currently. Perfectly right. Perfectly right. Each one varies depending on the company. What I am trying to tell you is this. As a private company, valuation ಮಾಡಿದೆ 8,000 rupees per share. 10,000 rupees per share. Have you ever seen any IPO with that rate? IPO. And IPO by 1 rupee share, 10,000 rupees per share. What I answer? And this is the biggest problem with all these companies. Valuation ಮಾಡಿದೆ full. But tomorrow, how can you go for an IPO with that value? And suddenly, how can you change your valuations tomorrow? Are you understand? If you have seen all the IPOs today, the ranges can be a 50 rupees IPO also are there. 800 rupees IPO also is there. But I am not saying a 10,000 rupee IPO or an 8,000 rupee IPO. See, after listed, then the value can keep going up. I am not denying. Like our MRF shares. Right? So it can go up. I am not denying. But when you start an IPO, it cannot be with this valuation. So first advice to all your clients. Aha valuation they have. We should tell them, idella okay. But in next 2 years, if you want to go for listing, your IPO price, let us think now only. What do you think public will give? Oh, 800 rupees kodabo sir. 800 rupees and 10,000 valuation if you do, who will give? It doesn't mean that your valuation is wrong. Don't get me wrong. Hey, don't get confused. Not that your valuations are wrong. Your company is worth 10,000 only. I am not denying it. But tomorrow at that 10,000 you can't go to public. So what you should do? You have to increase base. Right? Baby ko base pasand hai. So you have to increase the base, isn't it? If you increase the base, then automatically the valuations will come down. I hope you are understanding what I am talking about. Enterprise value is not changing. I am not changing the enterprise value. I am telling you, ensure the denominator is increased, automatically the value will come down to that 800, whatever you are thinking of, 800, 500, 600, then you are ready for IPO. I think you are getting the link about what I am talking about. So very important. Now it's okay, whatever valuation, enterprise valuation, that's divided by number of shares, that's my value. Right? But going forward, if they are planning for an IPO, start telling them, then you start increasing your base. And for that you know the options. Whether it has to be a fresh issue, whether it has to be a rights issue, whether you want to go for a bonus issue, that you decide what you want to do. But the fact is you have to increase the denominator. I think we are clear on this aspect. That's very important to tell your clients. This is what I said here. You should be careful with pre-listing valuation prices. Right? What valuation prices you have currently should be very careful because in tomorrow it cannot be the rate. Here is a list of what happened in last few years. You see 2023 listing dates, 2022, 2021 and of course a few of old ones. See the issue price. These companies were at 280, 220, some of them were 59 rupees also. Yeah. Then you have 800, 600, 400, 270. And different companies went at different IPO prices. No problem. But none of them have gone for 3,000, 8,000, 10,000. That valuation was not there. But all our whatever valuation reports we have will all have 3,000, 5,000 things like that. And that is why we have to tell them to increase their denominator base ready. So that when you go for an IPO, the valuations, recent valuations must match with the IPO pricings. So today if I have done a valuation for 8,000 rupees and tomorrow I want to go for an IPO for 800, it will not happen. That's what I am trying to tell. This is most important, mock drills. Very important to have mock drills. We all know our companies will be fighting. September bantu, September 31st March aitu, then September came. What is the first thing the companies will do? September came in extension. Ask for the extension. If they are at this level, how will they go for IPOs? Because in an IPO we are talking about within 45 days, within 60 days, you have to close your entire financials and report. You are busy asking for extensions. Don't even think of IPO. So the first thing you have to tell the companies is, you are not ready for an IPO. So if you want to be ready for an IPO, can you also finalize your audits, close your books of accounts and ensure everything is filed in 2 months after close of 31st March. That means by June, can you file everything? If you can file everything, I think you're ready for one step at least closer to an IPO. Means what? How is that possible? Your ERP. What is the ERP you're having in your systems? What packages are you using? You know, Tally included, sir. No problem. Tally also has grown today. But what kind of Tally are you using? You are using a Tally which is not Tally only. No, so you need to understand that in that also you should have ensured that you have done I have seen some of the companies. I went to one company, okay, I asked them, what are you using? They had called us for some CFO service. So I asked him, okay, what is it that you're using? We are using Tally, sir. Don't remember, sir. Tally and all, if you're using, no use of it. So I went with a presumption, SA 240. I went with a presumption saying that no use, I think this company will waste on me. I went there. The way they customized Tally, it was better than any other coding system. They had a big coding done and then the way they customized. So it's not about Tally or not Tally. It's about what is your total overall ERP package. There's such a strong ERP package some of the entities have. Very amazed to see that. So do you have the strong systems wherein if I want a balance sheet P&L account, can I get it like this? If the answer is yes, that means your systems are strong, you're ready for a IPO also. And then like what Kamal was talking about. What is the changes between 31st March closing figures and by the time audit happens? How many changes are happening in your financials? That will tell you whether your ERP systems are good or not good. This is for us. Does your CA office have peer review certificate? That means whether your own CA organization has been peer reviewed. You know what I'm talking about. So if your organization is peer reviewed, that means you are allowed to do certifications for a company for an IPO. If you yourself is not peer reviewed, then you cannot do certifications for all these companies for an IPO. So in fact, many of them, they ask, hey, please ask peer reviews to come and do a peer review of our entity. So they ask why? If they do that, then as a CA firm, you are ready to take up this job. Like what Kamal was talking about, opportunities for a CA. There is an opportunity for a CA provided you have already got the peer review done. If you don't have a peer review done for your organization and you don't have the certificate, then you can't take up certification jobs for any of these pre-IPO listing entities. You can't do that at all. So you must be. So how many of us have a valid peer review certificate from the peer review board? If you don't have, I think one of the things you can do is ask them to come and do a peer review. That's a different story. They will squeeze you left and left, right, saying that do you have this, do you have that? For your client, did you check this, did you check that? What is your audit papers? Have you followed this SA, that SA, AS, everything they'll ask. But it's good. It's good for us because it will help us to improve our own audit styles, our own audit papers. So it's good for us only. We'll also grow in to that next level. If we are not done, then at least we'll grow up to that level. So we'll be ready for peer review. Why? Here is what I said. DRSP provides for reports to be provided by a CA, and these reports can be signed only if you have a peer review certificate with you. Otherwise, you can't sign any of these papers. Here, these are the reports we give for most of these companies. It goes for an IPO. I'm not getting into all these details, but these are the reports which are there. One of them I'll tell you which is important for us, that is restated financial statements. Why will I restate financial statements? My financial statements are already there. Why should I restate it? Simple. If the auditor who has done the audit of your companies for the last 3 years is an auditor who does not have a peer review certificate, then if I have a peer review certificate, I have to come and do the audit again. So, I repeat again, an auditor has done the audits. Every year it has been filed. But that auditor does not have a peer review certificate. Let's say I am the auditor who has a peer review certificate. Tomorrow I will have to come to your company, that is a trying company, and do a restatement of the financials and do an audit again for the last 3 years, and then only they are ready for an IPO. Do you understand what I am talking about? So therefore, it becomes important to tell our client, telling that, hey look, you need to have a peer reviewed auditor. Before telling, we get ourselves peer reviewed, then go and tell. When they ask us, then we are only risking ourselves. Right? So I'm giving you some interesting facts telling that, here, The statutory auditor of an immediate previous financial year did not have a valid peer review certificate. I'm talking about statutory auditor. Auditor who did the audit, he did not have a peer review on the date of signing the immediately previous year's financials. The company has appointed a new statutory auditor who is holding a valid peer review certificate now. Then he has to do all these reports. AAFS, RFS, SPIFS and RAF. Here. All these things you have to do. What are they? Annual audited financial statements, special purpose interim financial statements, re-audited financial statements, pro forma financial statements, restated financial statements, all this as good as redoing everything again. Because it was done by somebody who doesn't have a certificate. So we need to do it all over again. So I think it's better if all of you also apply for a pay review, get yourself if you want to take up this job tomorrow. Then comes this also, independent CA certificates. Anybody who knows how many independent CA certificates you have to give just before listing? 40. Yeah? Around 40, 45. Around 40 to 45 certificates we have to give. Who can give independent CA? We have to give certificates pre-DRHP, that is before draft red herring, during red herring, and then during actual prospectus. I told you it's around 30. But if you add all the previous ones, everything comes to more than 40, 45 certificates that is required. And who can give this? We, as chartered accountants, can give these certificates. Of course, we should be ensuring that we have all those peer reviews. And here are some of the examples of the certificates what we have to give. These are not new. These things you know it yourself. I don't have to explain. You know what these certificates are. Finally, if we have taken care of all these things in those 18 months, then we say those 6 aspects are done. Company is ready for a IPO. IPO has 7 steps. I will not get into what those 7 steps are because I told you that's not our role. But just to tell you, these are the 7 steps for an IPO. What are they? Hiring the right investment bank, that is your merchant bankers. Filing the application with SEBI. Drafting of red herring prospectus, that is called DRHP. Draft red herring prospectus. There will be a lot of roadshows. Roadshows is where you have to create a story to impress your investors, QIBs, telling them how it is important to invest in our company. Deciding the IPO price, which I talked about valuations. Launching of the IPO, and then finally allotment of shares. This becomes the 7 steps for IPO. I think we are clear. And at the time of launching of an IPO, the role of a CA is to talk to all the intermediaries. All the intermediaries, all these fellows. Underwriters, merchant bankers, registrar to issue, lawyers, SEBI, stock exchange. We need to coordinate with all of them because we are the ones who have all the data. The data room is with us, certifications we are giving. So we coordinate with all of them to create all this. So if you have any questions, I will take. Otherwise, I think on time, I have stopped. Thank you very much. I hope you got an idea about how to go for a pre-IPO stage. Thank you so much. We go to 6:15 on dot.
Thank you, sir. Any questions for sir? Are there any questions?
Yes.
So how do these loss-making entities, startups get IPO?
Loss-making entities, they have an exception. Where if 75% QIBs agree, then they still go for a. Everything has an exception. All of them have an exception. And those proxy advisory firms telling that the future, based on economies of scale, can be done.
So if there is any change in accounting policy, then how it will impact on the reporting requirements?
Accounting policy is also one of the important aspects, and that is why restatements will come. I told you one of the
aspects.
last 3 years we have restated based on that to show the effect.
So restated financial statement.
Correct. RFS is come to picture.
In case of SME IPO, how is the price stabilization happens?
Can you elaborate?
Post-listing, how the price stabilization happens? Is there any money which has to be routed back to merchant banker or underwriter or market maker?
In the SMEs especially,
yes,
there is something called as these market makers.
Yes.
They are the ones who play a bigger role. Reward market makers.
What is the role of the promoters?
No, the promoters they should not be involved.
They are not in the team, right?
No, not the promoters. It has to be because that will still come under inside activity. So it has to be done by the market makers.
Yeah.
What is market makers?
It has to be happening in his own money or it has to be in the help of the promoters?
Neither of them. Neither of them. Market makers will have their own funding.
Right.
And their job is to do both the call and put options both.
So officially it cannot.
Officially it can. Market makers only have to do it. Yes, thank you.
As always, sir's session is always interesting and there's no way to sleep also during his session. Definitely all of us are alert. This was an interesting session to know what we can do for an IPO company to go to IPO in the process of IPO. Thank you so much, sir, for coming all the way and then addressing all the members for this. On behalf of Bengaluru branch, we thank you wholeheartedly, sir. May I request our chairman Kamal to handle the committee, sir. Thank you members for your active participation. Both the sessions were interesting and it was a good interactive session. Thank you all for this participation. Thank you. Good night.